Do 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 do. I should have bought my. I got my coffee ready. Well, did I not pick this back through? I swore I did. Oh well. My neck. Hello. I'm here. I just was messing with my coffee. I forgot to put the coffee pot on. I had a setup for it, but I didn't turn it on. I forgot to put the water in and turn it on. Just a dummy about that kind of stuff sometimes. Donut. Is that? I wonder if D-Nut is Dunkin' Donuts. All right, everybody, one at a time. AMC, please. We will do AMC. Yes, we will. There's not much to say about AMC right now, so I can kind of like hit it really fast. We'll come back to it. We usually end up spending a lot of time on this one. So, like, I've got after hours on just to track this trend a little bit better. And I do think this trend matters. During regular trading hours, it's a little different, but there's just a lot of space right here. And what I'm guessing is this could be like a 1, 2, 3, 4, 5 that's done. But I'm supposing that it has a little bit more topping action right here going up to 370. I don't think it's going to go beyond that. And I'm going to focus on the waves here. We'll talk about some criticism that I got from the last video that I did, which is probably one of the more widely watched videos that I've done lately, because I was talking about things that get people's attention. Usually it's the spring or the, we call it a squeeze for AMC. And so people really want to know if this thing's going back up. And with that comes a lot of folks that probably want to say things and critique the work and all that stuff. I'm perfectly fine with that. I don't know y'all well enough to be upset by it. So it's like, you know, if I don't know somebody, like, it's really hard for them to upset me. I do find it to be a bit odd because it was a misappropriation of the work that I was doing. I'll address it in a minute, and I don't really want to say much about it because it's not drama, and I don't like drama, and I don't want to kind of perpetuate it. And frankly, I don't know where this person got their information from anyways. But I want to confirm some things that they said and then sort of defend what I was doing, I suppose, in the critique that they kind of, again, misappropriated, maybe not even on purpose. And it's weird because I kind of agree with them, like what they were saying, like I totally agree, which is a strange thing to say. But that's just where I'm at. So right now, I don't see anything bad about what's happening, but I don't think that we could say this has had a creek jump yet. And the reason for that is that when you elevate the creek, and the creek is a moving body, it's not stagnant. There's always one below that you can go back to. You can go backwards to a creek. That's pretty normal. That's just going back to a support. It's pretty straightforward. Where was the support, right? Liquidity is king, and that's what we're going to talk about here in a few minutes. But like, that's low, right? And I think that if you come back down here, it does demand a little bit of analysis because you either have a buy up that's kind of shallow around 3, and that doesn't go into a new low. And I'm calling that a last point of support because that's what it would be. Because as you're rising here, you're building last points of support. And then I'm calling a spring dropping below that. And typically I'm looking at the big picture, talking about going beneath the bottom of the floor where the liquidity shelf is. That's not controversial. I don't think that's a bad way to describe an LPS or a spring. I was told that somebody, again, thought that I was making crap up, and that to me is not bad Wyckoff. And I'm not using Wyckoff when I do stuff like this with these wave analyses. That's not Wyckoff. Wyckoff does not use timing at all. The only thing it does is suggest, because they use P&F even to help with targets. They don't even have targeting systems within Wyckoff really, aside from just range levels. And that's it. And then they don't use trends typically. There are some trend analysis in Wyckoff, but it's like most of that comes from Wyckoff 2.0. If you look at the original, it's more about it's about range analysis. So beyond the range, Wyckoff doesn't really do anything. It calls it a markup or a markdown. It's just a markup period where you have a series of supports, or markdown period where you have a series of supply drops. That's it. And the timing aspects of Wyckoff are just not there. The phase B is an indefinite time. There's no set time zone for it. So a lot of the stuff that I do with timing and all that stuff, that comes from wave analysis. This comes from measuring out proportionally waves. It's nothing to do with Wyckoff in that regard. So there's a lot of folks that when they hear me say stuff like LPS or spring, they want to like take me to school and be like, well, you don't know what you're talking about. I actually completely agree that there's a lot of people that do Wyckoff willy-nilly and just kind of put spring or LPS in the wrong places. We don't talk about that though, and I've been very vehement about that in the past and saying that I agree, like you can't just slap it on there. It's only really relevant based on the time frame that you're looking at, like proportionally. So what I'm seeing, and I don't know if they were watching the video and took a screenshot and decided that they wanted to use it as an example for what not to do, or if they genuinely were watching it, then I don't know how they misunderstood what I was saying. But or if they just got somebody that was like, hey, this guy's doing this, you should, blast him or something, or tell me what you think about this. And he's like, this is wrong. Well, yeah, if you're doing wave analysis, you can't go at it with Wyckoff. That's like me going and saying that I'm doing this wave analysis and then I'm appropriating Elliott wave incorrectly, but I'm not even using it. So it was a really strange thing. I wasn't using Wyckoff when I was doing the analysis that was critiqued. So I'm very confused by that. But I did put in my video title, spring or LPS. So that means that I guess anytime you watch the video, I'm supposed to be talking about that. But that's not the case. That was really just me talking about what I'm expecting here on AMC. Last point of support here, we've already kind of established that $3 is that area where you have support. There's the highest amount of volume coming off of 3. We've dipped below it frequently. This looks like a repeat, although longer-winded, of what happened back in April. That's all I'm really was saying, and that in our case, an LPS, which again, this is rising supports, kind of building back out here. If this is the creek jump, and it did jump the creek, and there is a creek jump here, then a back up to that creek and a back up to the floor, which is where the liquidity is, that's more of like a test than an LPS. And you might say like, well, locally there could be a little spring. If there's a range here from 3 to 330, that could have a little spring, just like we had a little one back here. But proportionally, that's not a spring necessarily, and we would have said that, well, we already got it, right? And we've been arguing that this could instead be a phase B bottom, which is what I've been saying, and that this is actually just a prop up to define the creek before you drop into a spring. I don't think any of that's wrong, and I would defend that. If someone wanted to come and say like that particular part of it was wrong, then we could sit and talk about it. But what was in debate was the GME chart, and they were basically saying that like me using trajectory here to define possible places where this is being targeted, and I don't have that on the chart right now, but basically me using these creeks to define like low spots of interest, whether it's down at 6 or up at 9, that was not Wyckoff appropriate, and I was doing too much, and that was bad Wyckoff. That wasn't Wyckoff though. That was me looking at what we have seen traditionally in wave analysis, which is that if you've got a buy up that fails And yeah, saying the word distribution brings to mind Wyckoff, but I don't think Richard Wyckoff would care if we're using it correctly. Like, that's kind of where I would go with that. Is I honestly think he would be more interested in questioning and asking questions and talking about it, as opposed to just like coming out and saying like, you're doing that wrong. You got to do it this way. I think that's dumb. That's kind of what we do with academics, is like, we tend to be like, yeah, that's not the right way to do it, which is fine. Again, I've done that before. I don't think there's anything inherently wrong with trying to like bring clarity to something. But like, this is what I would mean when I say distribution, like that we're coming up here and we're getting rid of shares. We're handing them off to weaker parties before we take it down. That would be an argument, right, of a particular direction movement on this wave, which is down, up, down, right? Like an S curve down, as opposed to, no, we're starting a new S curve to the upside. And that would be, again, that's not Wyckoff, not so much as to say other than like, well, we've jumped the creek and we're holding above it right now. That's kind of all you could say, right? So one of the things that I've had a lot of issues with Wyckoff is that there's a lot of folks out there who get really like upset by it because it's become like a fad, and I get it. I agree with that part of it. And I'm not even like telling you who in question this is, but like, I totally agree. Like it became kind of a fad not that long ago. And there's a lot of people that do it with really weird stuff. Like I've seen Wyckoff mapped to like a downtrend, and I'm like, I don't know how you do that. That's not even part of that system. Just use a wave format, like use Elliott wave or something, like that tries to describe movement, where Wyckoff doesn't really do that. I mean, it just doesn't. I'm sorry, but a markdown doesn't really address that. I mean, you can say it does, but a lot of that stuff comes from, again, Wyckoff 2.0. The original guy didn't do a lot of that. He really looked at range analysis, and he looked at the markdown and markup as just, this is where we're moving for liquidity, and you kind of get there when you get there kind of thing. And you've got guys like Bukowski, and I've been doing stuff with him a lot too. Thomas Bukowski is a statistician, basically. He does breakout targets based on statistics, and he looks at different patterns in the market and does statistical probability with that. I do that as well. That's not Wyckoff. So when I look at something like, and I was looking at, I'm not Google, this is not the right one. I was looking at MPW, which moved like 10% this morning. None of this is particularly Wyckoff, though you could say it is if you want to like talk about phase B bottoms and then potentials for springs here off phase B bottoms. Certainly you could do that and say like this is the selling climax and then an auto reaction with a phase B top. Totally legit. Phase B bottom could be defining a spring and then going down. But I could also just look at this and then ignoring Wyckoff could just say, well, look, man, let me not call it a creek, since that apparently makes some people upset. I'll just call it a downtrend, like a widening downtrend. This broke the widening downtrend, came back and retested it, pushed down against the resistance there, like the buyers. It's trying. We don't know if it's going to hold up. This could just definitely be one of those situations where it kind of gets stuck and drops down low, in which case, sure, you can call it a spring if you think that's a phase B bottom. I don't have any problem with that. I don't think I've misappropriated at all what Wyckoff does. It looks at liquidity within a range, and it looks at volume within a range. It's that simple. So that I call this a spring is something really important because it's not back here. It's not here. It's not here. None of these are springs, right, leading up to this area. So it's like these are defining the range. I'm not doing it wrong in that regard. Okay, I'm not jumping the gun and calling everything a last point of support or a spring, even though it could end up being that way right here, that this is the last point of support. It's not that case. We don't know that until it happens. You have to see that breakout into the SOS, which is the sign of strength above the range. That hasn't happened yet. So right now, could I call this an auto reaction with a phase B top? Yeah, because the auto reaction does break down and then it comes up again and it makes a higher top. That's a phase B top. You're entering into a phase B, which is when you're going to trade sideways Typically, volume comes down, it gets really boring. And yeah, we're range bound. Then you have a bottom here. This is just a support. It's probably phase B support, because that's usually what happens, is that you create that phase B support and then you're going to bring it up before you try to take it more time back down. None of that I don't think is wrong. I would argue that none of that's wrong. Now you're looking at, are you going to create a last point of support, which is higher than the phase B bottom typically, doesn't make a new low, and it is the last point of support, not like a last point of support, because again, it did jump a creek in this trend, or is it defining a phase B creek where you now have a higher creek here? Both are possible. And I think that's where Wyckoff kind of loses a little bit of its steam, because, and this is again one of my critiques against the system, because a lot of what they don't know has now been supplemented by modern interpretations of the stock market, different methods. I don't think anyone would look at this and say it's definitely going to be this or that. Like, that's the thing. You can't say that in Wyckoff. So it becomes a fragile kind of momentum system where you're like, yeah, you could do that. You could say you're sure that this is what happens. But at the end of the day, like, Wyckoff would not say that necessarily. He would look at liquidity and probably make an estimation, like we're probably going to see a spring or probably not. But I don't think he would have any definitive answer there. And that's why most Wyckoff traders do not trade phase B, which is widely known. So like, if they saw the spring, would they trade it? Probably. You know, if they saw a spring here and then an auto reaction back up, or, well, I should say a reaction back up and then a test on the floor at 350, and then it broke that creek, I think they would trade it. And I think you'd have a pretty massive move into then an SOS. And I can interpret all that from the top and tell you that, listen, I don't necessarily know what's going to happen in Wyckoff terms, but I can say that this still looks pretty healthy to me. I could also look at this from the point of view of, and I'm going to be done addressing this very mild controversy. I don't think there's much controversy here at all, to be honest. I'm going to look at this and tell you that I don't think that this is defined just by Wyckoff. I think you have a widening downtrend. That's just a widening downtrend, a widening spread. That just tells me that there's likely going to be a change of direction. It started way up here at $20. This is long-term very bullish. Like over the next 2 years, it's going to be very bullish, in my opinion, because it has this widening. There's a clear, huge increase in volume into the bottom. If it reacts back up, it's going to be heading back towards the top. That's Bukowski targeting. That has nothing to do with Wyckoff, unless you want to argue about that's where the distribution happened. So maybe it goes back up at least to 12, which is the floor. But that, guys, that's not Wyckoff exclusive. That's just looking at where the floors are, you know. So I look at this and I'm like, look, man, it's entirely possible that this is some kind of like a macro spring. I'm not going to get into that right this second. If this is a phase B bottom right here and you drive down, you could end up below the floor and it could be like a macro spring. But I also don't really care. Like, at the end of the day, the Bukowski target already gets me up here. I don't need another reason. And then beyond that, locally, there's a widening. So this is a broadening with a flat top. What that means is that basically you have like an area where this is widening out. It's trying to go down again. It hasn't succeeded. But basically this is widening out. Not yet. And it might. Who knows? But this is widening out and turning into a like what they call a broadening, widening top. The 65% of this total move from the breakout point is your target. That's 950. That makes perfect sense to me. Like long term, 950 is about where I thought it was going to be, you know, a long time ago, like $10. That's right where it came back to after this huge drop back in 2008. You know, none of that is Wyckoff specific. So if you think I'm doing Wyckoff only on this channel, that's not the case. Okay. And yeah, if it were a problem that I felt like was indefensible, then I would just have to say, all right, I messed up. That's not the way you use it. I don't think I've used any of these incorrectly though. Like I'm pretty schooled in it based on my interactions with Stockfather, who literally got like a degree in Wyckoff. I don't believe in calling everything a spring. I don't believe in calling everything an LPS. So does MPW look really good right now to me? Yeah, It looks really good. There's a divergence, also not Wyckoff. Didn't use indicators like this. Do I have to say that every time? No, and I won't, so don't worry. That's being a little passive aggressive, I think. But I will say it because right now it's like, look, man, not everything we say on this channel is one method. It's just not. In fact, I've been using like, right here, I've got like at least 1, 2, 3, 4, 5 different kind of methodologies at play. 6, if you count the trend build out. That's a lot. That's not one thing. That's like 6 different things, which is probably why my charts can become ridiculously messy. But I'm not going to apologize if someone else can't read it. That's not my fault. Like, maybe I shouldn't have a YouTube channel, Maybe I should just keep it to myself if that's a problem for people who, I guess, get offended when other people's charts are not what they think they should look like. I don't know. That's a weird thing for me to say as well. But look, man, this is a hidden divergence. Made a higher low, at least for now. We don't know again. It could crap out here around like $5. But it made a higher low. And by divergence points of view, this should end up back up at 6. I'm just concerned that they're going to use a knockdown method going into September, probably with the rate cuts. That would have to be pretty soon, like an up thrust here and then drop back down low if they wanted to get it before September, because it's coming up pretty fast. So, but that's a hidden divergence. So right now, if it can manage to get above maybe about the 50 on RSI with some support here, I think it's going to potentially push very, very high. Usually that goes beyond the reach of the previous top by a good bit. So that should be an SOS if that's the case, because this barely came below. That's a really positive sign. This is a very bullish move, y'all. We've been talking about MPW for over a year, and there's been opportunities to kind of buy low below like 350. And we're talking about 100% plus move now going into the next year to mark up, which is going into the next range. From there, it could take a long time. There's no telling. I don't necessarily believe that it's going to do this exactly, but this is also like a really long time period of sideways. And I wouldn't be surprised if we accumulated around 6 to 9 for a bit before moving on. So anyways, that's it. I'm not addressing that controversy anymore. If you watch the video, you know that I didn't actually do Wyckoff the entire time, but I was using a lot of different methods. So right now, I'm looking at this as like what I want to look at it as. If it offends you that I call it one thing or the other, or it makes somebody uncomfortable, I apologize. Like, I'm not trying to, spit on somebody's legacy here. I genuinely don't think I'm using it wrong in this terminology and the way that this bigger range is set up. I think I've been pretty straightforward about it. So right now I'm looking at it like this area is a problem area. There's a lot of resistance here from about 350 up to 370. I've already said it kind of multiple times. Like, I genuinely think that what's most likely here, and I don't really want to even draw it, but what's most likely here is we get like a series of upthrusts and reactions kind of going across here into earnings. I would be very surprised, or not super surprised, but I'd be pretty surprised if it broke out and ran to like over 4 again. That being said, is it possible that it runs back up to like 420? Of course. We talked about 420 when it first ran up to 4. There was 420 and 460 as other potential places where we might need to go back and check. I don't find that to be particularly controversial either. If you go back and you look at the supports on the way down, there's one right here at like 415. We got pretty close to that one. There's another one pretty far up at like 450 area to 460. And then, of course, there's the $4 one. These are all supports that could be back tested, and they don't necessarily mean you're breaking out. That being said, we have resistance coming down in the form of a creek, which is, again, made and defined by the highs as you see them being created. And this right here, right now, is where that wall is. I do believe it's going to be similar, not dissimilar, to what we experienced right here before this setup going into May. I've more and more been thinking that this is probably like a precursor setup. We're kind of just widening out the same range that we messed with when we first came down. I do still think it's possible we're going to see a new low, or at least below 246. I don't think that's off the table. So I'm not going to take it off the table. Even though people may think that's a bit crazy, like why not just hit it and run? Why we have to do all this stuff? It's again, it's not that complicated. It really isn't. And it may very well be that we wait into rate cuts or we're up into rate cuts by September. I don't know. The only situation where this breaks out and goes is one in which we make the jump now. And it would probably, depending on where it is, it'd have to be something like a quick dip to, again, I don't even know. I still think you have to go back to 3 just to test it. But I suppose if it did manage somehow to not hit 3, I'd look now at 319. And then it'd have to come back above the top. And it couldn't just stop there because it's broken down here. It'd have to kind of keep rising from there. And that's a pretty crazy scenario. I don't find that to be very likely. Like, I find it to be pretty unlikely. So I don't believe that this scenario is even really worth a whole lot of time. And, sometimes it ends up being the one that gets picked, but whatever. What I've got eyes on this week, Google and Tesla, they've got earnings. Google, I'm in a small position for October 225. I think it's going to get up here based on, a momentum build. I don't necessarily think it's impossible that this is some kind of head and shoulder structure, but the idea of it being a head and shoulder structure is kind of pointless right now. Like, you could say that this is going to shoulder and top off kind of where it's at 190s, and then die, and we could say, well, right now it's overbought, so it doesn't look like it's going to just crash and burn. Yeah, but the head and shoulder would be very, very low. Like, it'd come all the way down to 136, and then it would break down, and that's the confirmation that you'd get there. And before that, you're going to run into what I think is the main uptrend, which is kind of straightforward. So you'd have to breach 164. Do I think Google's necessarily going to breach that and go down into a head and shoulder and then drop from that? And, that's a lot of what ifs, right? That you're basically presuming that it's going to be weak and stay weak. In the past, during most of this uptrend, I'm on the 4-hour right now. You can see that this stayed in overbought territory for quite a long time, from March 18th, which is way back here. I mean, it was already, it's kind of crazy to look at this now. This was already overbought on the 4-hour when it first came up above. That's insane to me that's the case. It's so bizarre to me. This whole area is like basically just overbought. That's the majority of the run, That's kind of crazy. We're just now getting into overbought territory on Google again. So do I think it could have a similar run? Doesn't have to be exactly the same, but do I think it could have a similar run, after a quick chop? Sure. Like, this is basically the same exact thing I already have on the chart, which is kind of funny, but there it is, right? That's the same move. I just copied and pasted it. So do I think that's totally possible, even though this is already kind of overextended a little bit? Yeah, it's possible. So from now until October, I do think Google could be quite bullish. There's not really a lot of reason to be bearish on this based on like technical or fundamentals, unless you're just somebody that follows like every bit of news and every single lawsuit looks like it's going to tank the stock to you. And they're always fighting off lawsuits. It's pretty normal. I also have here a wave cross coming down. This was a wave support going up. So this is where we have a momentum. It was lost here, so we have a cross down. That S-curve meets it again in the same time. So right now, I do believe that this is highly probable. Like that this will be coming up to around October 230. So I think it's a pretty safe bet on my part. That's all I'm going to say. Earnings is tomorrow. I'm going to move through these pretty fast. There's more than just 2, but these are some of the big ones. Tesla. Is Tesla in a bad spot? Tesla's a weird stock because, as you guys are aware, it has these highly volatile moves. And there have been times where Tesla has presented a very, I would say, almost obvious distribution pattern. And I'm not talking about my opinion either. Like, I remember when Stockfather and I were looking at Tesla a long time ago, seeing the distribution, and we were like, well, that looks like distribution. I went and checked with him. He's like, yeah, this is what I think it is too. And I'm like, so then what happens is that it has this drop, but it immediately corrects, has a change, and then it just rockets. And you're like, well, that's odd, And it's a pattern stock, but like where it repeats a lot of the same patterns, but it's extremely volatile. And sometimes the volatility works against it because volatility in a lot of ways would mostly indicate that something is perhaps selling off, not buying up. But then it has these crazy volatile movements and then it ends up, it makes the higher low and then it just goes. So not to get any more like divisive, but the CEO is the main reason why a lot of people are bearish on it. And then the idea of all these EV credits going away, that's kind of overblown. I actually looked at it. They're not getting 3.5 billion from the government this year, but they are getting like 3 billion. Like, it is not a rug pull. It is going to dwindle like quickly over the next couple of years. So, but 2025 is not the year to expect. 2025 is not the year to. It's not the year to worry about Tesla in terms of those only. Now, if you have other arguments, you don't like Tesla because you think, well, he's starting a political party and it's going to screw with the company, or you think he's too late on AI, or you think the robo-taxi thing is just a big shamble, or if you think, well, California is going to ban the sale of Teslas because of this or that. All of those would be better fundamental reasons than just to say it's because of these EV tax credits. They're not going to affect Tesla that much this year. That's just not a thing. So let me just finish this breath, and I'm gonna suggest to you that what's happened right now is actually quite bullish. So it came up and it pushed really high, and at first I thought, well, it looks like a head and shoulder, and it certainly broke down like a head and shoulder, but it hit the target. So it flushed up, flushed back down, almost like a reset button, and it goes back and it hits this lower widening trend. Okay, this is a resistance that's existed since May of 2025, and last time it did this, it did chop up high above it, and it creates like a secondary widening, maybe another creek, if you will. I find it to be a bit curious because now we've defined a new top here locally at like 338. And we came back down and we checked that marker and back tested the 0.5 on the fib. I'm wondering if this is really just a very classic bear versus bull area, because we have pretty sharp evidence here. If you flip the chart upside down, this is just a golden pocket retracement, right? But then if I look at it in the upside down land, I'm like, well, this kind of just looks like a buy up and a sell down. Like if I saw this chart and I thought this was bullish chart, not bearish chart, I'd probably be talking about the idea of a complex head and shoulder where you have an unwinding of positions. Now that does mean that to some degree this could end up being kind of a double bottom of sorts. But even if it were, I'd still expect it to come back down and hit that trend, which is actually at like 344. So to put it quite simply, even if this is very weak, and again, you can see with the RSI kind of curtailing down, it's possible this has some weakness in it. Even if it's pretty weak, I kind of think it's going to still extend. I'm pretty sure it's still going to try to extend to 345. I'm pretty sure those aren't really very definite statements, Booksy. No, I know, because this is a bit of an odd banana, if you will. There's a back test. It looks decently strong, even though the volume-wise it's kind of like meh, and then RSI is kind of meh. I would not be surprised if we pumped into earnings and then rug pulled, so that it kind of runs up into tomorrow. Maybe it punches a pretty high ticket around 340s or even 345, and then maybe it has like a more substantial correction afterwards. This could end up building out in a number of ways, so I don't really want to speculate too much. One of my thoughts is that this reminds me a lot of some other stuff I've seen where there's a consolidation upon consolidation where the market doesn't really know which direction to go, so it takes its time and like working it out. And I'm wondering with this motion right here, it just reminds me a lot of a widening build out that I've seen before, where it starts to build a widening and then essentially like creates like a middle and then jumps, because it did. It went and generated a middle right at 330, whips high above it and then whips high below it. It's like I call it like a double flush. It's not exactly a pleasant one because you're like, well, which direction's it going? but that's a very normal motion that starts this sort of a widening structure. So I do wonder if this is sort of what's going to be generated with like an earnings, essentially. Like, so you're building out into a kind of a widening structure. It makes sense if you look at where we consolidated before was at 320, and then there's a resistance drop at 330 before it came down. And then if you look at the big picture, I know it's a mess, but this is essentially like consolidating like a normal wedge might, at least for now. So it would not surprise me at all if there's sort of a widening top here in order to test this wedge. Let me see if I can find and this is what I'm talking about right here. In order to test this wedge out, I think it makes sense to me to do that right on top of here. And again, it may be that this still needs to go down and break down, but it also could just be one of those things where, you know, we do see another one of these where it's like it pumps up, it breaks the resistance, and then it comes back down to go back to like the lower portion, and maybe it doesn't. And that's where you see it finally go, and it's a widening breakout, and it goes to like 400 or something like that to start. The low targets on Tesla are pretty low. They're like 260 down to 250. The high targets are pretty high. They're like 400. So this is a very volatile move incoming. I don't see it as, aside from like consolidation here around 320, I don't see this as particularly benign. Like the next move that comes in will be pretty big. It should be pretty big. Based on this is like a 1, 2, 3 with a long 4, you might surmise that this is going to have some kind of a, you know, a decent push. But the 1, 2, if it is there, it did make a lower low. It'd have to be pretty low. So it's not really a great one. Again, Elliott wave is what it is. I would, again, suggest maybe 450. That seems about right. You know, that seems about right. I don't know the Bukowski target here. It looks about the same to me as this drop. So for now, do I think this could be an Elliott wave 1, 2, 3, and then a long 4? Yeah, I think so. I don't think it came back below wave 1. But I'm also, that's about as far as I go with Elliott wave. So again, if you're an Elliott wave person and you're like, that's not how it works, well then I'm sorry. Jeez, you know? Calm down, you know what I mean? It's not a big deal. Yeah, I think that overall this is probably a pretty decent way to look at it. And I would surmise that this is fairly similar to a triangle breakout here to go up to like 340s. And then likewise, I think dropping, that's about the same distance. So that's it for Tesla. I'm not really expecting earnings to be great, by the way, but I do think that Tesla has a way of, let's just say, like proving the haters wrong at times. It tends to be a very controversial stock for a lot of reasons. And I don't know, man. I've seen it do setups that look really bearish, and then it turns and flips really bullish all of a sudden. So I just wouldn't surprise me. It's just one of those tickers. AMC is kind of in the same boat here. It's got that consolidation sideways, and I already mentioned that. I don't think it's likely going to go very far here going into August. I'd be a bit surprised if it pushed way beyond. I do think it's likely, even if this were going to drop into a spring, not just kind of follow suit. I do think this is very likely, by the way. Do you see how like this particular push over the top here and checking resistance would then potentially lead to like a flush down? It's actually like an rotational symmetry of sorts where you're kind of pushing up above resistance to check, pushing down below support to check. That's very similar to what happened back here. I don't know if you guys recall that, maybe in particularly the same way that I do, but in extended hours, I don't think it's here. I don't think there's one at all in extended hours. But in regular trading hours, this actually does that. It pushed above the top quite a bit, and then it drops back down below. So you can see that. I'll show you really quick. So I wouldn't be surprised to see something like that. That's not AMC exclusive. That's not some like, oh, AMC does this thing. No, like a lot of tickers will do it, but you'll see that as like a double liquidity test. So the idea of it, like, can we go up here? Just think about it that way. Can we go down here, right? There's buy-in. We're ready to go up. Let's take it back down, final shakeout, and then we'll go, right? That motion right there of expansion, it would not surprise me to see that here locally, which is why I was saying, like, right now, and this is, again, I did most of this with extended hours on, so let me draw a new one. Right now, it would not surprise me, it's still the same, to see this kind of punch its ticket high and go like way up. And that might even be what we see on earnings, is like a quick takeoff or something like that, and then it drops back through. That motion, I would actually suggest to you guys, without going a little any further than this, I would suggest to you that that could end up being roughly what we see is like a kind of a dump after, like a double flush. We'll mess with trajectory and stuff later. It's probably here, but I don't have it on the chart. This is probably the trajectory. It's just like 64 degrees. So usually you can do that off the top. It's very steep. So it looks like this one's pretty accurate, the one I already have on there. I didn't do that on purpose. I just was kind of estimating based on what I saw visually. So it may be a lot faster than I have it. I have it kind of waiting until, this looks like October, but that's not right either. Because again, I did this with extended hours. This is like August. But I think it could go much quicker. We'll see, you know. But anyways, that's kind of your directional input for that. So the ticker in question that brought about this so-called controversy, which isn't really controversial, was this. It was really this motion right here. So if you don't like me using that Wyckoff terminology locally, I was using it here. That's all I was really using it for. On the big picture, though, this is just a macro iteration right here. This is the exact same thing that you would experience on the small scale in terms of like this top in the middle. And that's the thing that I think doesn't really fit any mold. So this idea of like punching your ticket higher and then, again, a phase B top that's potentially higher, and then we'll see. This idea right here applied to like a bigger scale. It's really the same concept. And what's interesting about this is, again, if this doesn't go low, then we have an idea that this may not go way down. If it goes down to 17 or 18.5 and below, then I think it makes a pretty good case that this is going to drop very low, because, again, where the established low points are here, if that drops below it, that does indicate that this is very likely from a behavior standpoint. Again, just looking at that as behavior and how the market's been trading it, it would be the exact same thing. It would just be on the big picture. Well, they don't have enough ammunition. That's why they would do this. This would be where they got the first bit and then the second bit. It's a lot of selling ammunition if they go up and keep it up a little bit higher this time. Well, what other proof do you have? Wave analytics, really, because the way in which you measure this is essentially identical. If you look at the wave I've got this line coming up. Wave analytics is more about trajectory building and timing in my book. And I look at it as a way of understanding the market in terms of sine waves, which the market is sine waves. But it would basically be looking at this as this. Okay, this is the sell down right here. This is the sell down right here from the top liquidity zone. Really, the sell down is like from here. It's actually quite low. And then this sell down begins off the top here around 39. This one really begins more or less around 26. But then what this does is it defines sort of a macro move. So you see how, like, after that happens, this comes up, pushes, yeah, it comes low again, but then it does what we call like the cross up, which is like a 50-50 pull. We see this actionably quite often, which is that and this is because it's sine wave, you've got the middle point here as a trajectory. That's the same trajectory, guys. I just copied and pasted essentially. That's the same trajectory we see on the macro. So if someone were to say like that's not important, I would just be like, well, I don't know what you're doing, but to me, this is very important. Like, this is a significant mark. I don't see it as insignificant because I see it in terms of wave direction. I think it's really, really important. So I look at this and I'm like, yeah, that's a cross up right there. So on the big picture, you've really got the same thing. This is all like hung up right on this midline, the orange line. So then you take that and you kind of bring it back out. I'll get rid of that to the bigger picture. Is it iterating? Is this the same behavior that you see on the big picture? Yeah, I think so. This motion right here of driving back down, we don't know how low it's going to go just yet. But again, I'm suggesting that this creek, which is again an establishing of tops and bottoms, this resistance here and support here, could very well be defining where that potential drop goes later. That motion is possibly and very likely going to be where the midpoint is. This would suggest you could come down pretty far. Now, that doesn't mean it's going to definitely do that, but it certainly could be that this down ends up back at 14.5 or something like that, which is really low. You know, that's lower than most people would want to go here, but certainly possible in my book. And I don't think that, again, that's the only place it could be, but I have a few different ideas about this. And I think that, yeah, that basically presents itself as the exact same dynamic where now you have a potential push up. And it's the same exact pattern we just witnessed, but on a bigger picture. So like, that's not traditional Wyckoff. It's just not. I don't really care if somebody else, and I'm going to say it as gently as I can, I don't really care if somebody else doesn't like that I add extra stuff on my chart and they think it's useless. I knew this was going to come back up to near 28 and probably then hit 32 to 35. AMC and GME are a little different because GME has been extremely resilient in its targets, extremely easy to predict by comparison. And this particular S-curve right here on GME is the same exact thing. Like I'm trying to tell you, like, this is what we had drawn out on GME to the upside months and months and months before it happened. And the same thing happened back here in November when we targeted 28 the first time. So I get a lot of critique on the messiness of the charts. I understand that. I accept that critique. My charts can be very messy and needlessly so at times. I think I could probably clean them up. I'm just weird about it, right? But do I think that this is a reasonable way to trade the market if it's working? Yeah, it is. And I don't think it's boxed in by any one particular method. So I don't really care. Nor do I think that I don't have the ability to use another method. I think I could use whatever I want to use. That's the nature of the world of free information in this regard. As long as I do it responsibly and not, again, not do it incorrectly. But this, to me right here, as a possible drop down, is that pretty low? Yeah, that's pretty low. Could it go that low? I think so. Does it need to go that low? Probably not. And again, that's more a question about liquidity and like what may or may not happen here. But this motion right there is the same motion. As I'm trying to get across, is that essentially, and I already have the S-curve on there. I don't know why I drew it again. But I guess we could do it more than once, so I'll do it more than once. Because I guess this one I made it really big and flashy. So I'll make this one kind of big and flashy. This motion, this is the same motion to me. Like I'm defining it with two different types of, I guess one is like angular, right? It's based on like creek jumps and all that junk. The other is much more fluid, and it really doesn't define anything other than just saying like that could happen. But the directional movement here across that middle, the fact that this is the same angle, the fact that this happened on a micro transition here when I was already thinking, and most people are already thinking this could probably come up again, this makes a lot of sense. And so to me, I'm like, yeah, I totally believe that this is reasonable, but I don't know exactly how it's going to traverse this bottom. So I used the terminology that I used to help define that. And then long term, do I think this is possible for the downward motion? Yeah. But get this part, okay? Because this is the part that I think a lot of people are kind of forgetting. This is not a prediction that's concrete. It's fluid. It doesn't have right now, it's not a solid state, okay? because right now it doesn't have any real legs to stand on. We don't have a defined bottom yet. If this drops low, it does mean to me that it's highly probable that that's the goal for the operators, is to get it back down to like 9, maybe even below that. Like I said, to like 6.6 or something like that, because it depends on what we see here. This is a mini version of what we've seen on the big picture. We've done this like numerous times. If on the other hand, you get a higher support, it doesn't go down and dip below the range, then you're going to possibly see the same thing on the bigger picture. That changes the dynamic of it. Now, it doesn't have to be behavior-wise the same every time, but if, for example, this does dip down, and let's say it doesn't go below 21.5 and it pushes up, well, I don't really have a strong reason then to suspect that this comes all the way back down. I'd have a much stronger reason to suspect that next time this could buy up. Maybe it drops, but it doesn't ultimately go below the bottom, and then it ends up going up again. That's very different, right? That's very different. I don't know yet because this is not concrete. Like, we're waiting to see what happens. Right now, we're just checking, backtesting supports. We've also lost a couple of these, downward resistances, which we're calling creeks, rightfully so, I think. Those are things that we have to be careful about, and that lost that rising support, which you're calling an ice. We have to be careful about. We have to recognize that that's a bearish signal at first, and unless it does that reversal in a certain way, downside is still more likely than upside from where we stand. And I think that's an appropriate way to look at it. This is the big picture, though. This is where the real kind of meat of this comes in. I know I've got this going way to the moon, but imagine for a moment, because again, we did the same thing here. We looked at this as like a redundancy. Like, all right, we've got a cross-up method. If it drops low here, we may see the same thing happen. We're really just kind of seeing an expansion. We're seeing a contraction right here. So directionally, again, I'm going to kind of clean it up now a little bit. Directionally, I'm going to just use the S-curves instead of all these big lines. Directionally, we're seeing this as like, hey, something's happening, and it's getting to a place where now it may be doing what we call like the right side, what I call the right side of the M, which is, again, if this is like a middle point, then really what we're seeing is a repetition of pattern. And we are. One push up that's pretty big, massive volume breakout. Same thing happened here, massive volume breakout, consolidation to a support, then do it again, break the creek. So it's jumped the creek once, twice. Okay, each of those times I've got the two waves here, once, twice. So there's 3 moves here that are potentially part of like a macro, a big picture consolidation. The good news is that if this is an expansion, which is partly good, partly bad, because again, if it goes really low, then you might see that expansion go low. That would make sense. Push, 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 push. Then it does stand to follow that the next reaction could actually be back up again. Now, I don't have, again, a gold pocket answer for this, like just yet, because it's fluid. But certainly, if this goes back and retests this creek low, even if it hit like 14.5 or something like down low, all that really tells me is that, well, and then it reacts up, is that, yeah, that was a nasty spill. Maybe it doesn't go that low. I still don't think it needs to go that low. I still think 17 area is more likely. But that's still like, it's the same, I guess what I'm trying to say is like, it's still the same build out. So like when you then look forward at what happens later, this is just a macro creek jump and retracement. This is just a creek jump and retracement. That's what makes this so compelling as a potential for iterative action, because the resulting movement here, if this comes down, let me show you what I mean. If this comes down and it hits this low, that means it jumped the creek, and yeah, it slid pretty far, but then it found the creek again and it bounced, or it stayed higher above it and then it bounced. That's a pretty big deal, right? So ignore these, like, I guess if you don't like them, you could ignore these if you want, these like waves down. Just look at that as a jump here. The S-curve pushes up, and then it jumps, and then it backs up till it finds it. This is the same thing. Pushes up, rejects it here, and then jumps, and then it would back up till it finds it. It's not complicated. Very, very, very straightforward, extremely simplistic in some ways, and I think effective, because at the end of the day, what we're really talking about is we're talking about momentum pushing against the resistance and breaking out. and then ultimately coming back to check it and potentially some weakness. Now, I don't know, again, how fast this goes, whether this derives a new top here. If it pushed up again to like 33, could there be a higher creek body? Yeah, right now this is what it is. It's hitting the two tops. It's the trend down, okay? It's not complicated, but this would certainly make sense. 1 and then 2. What about the big picture, Booksy? What about it? What about it? This is where things become, I think, extremely interesting, because then when you look at the big picture, yeah, there's this kind of nasty reality there that this may actually be S-curving down, which I've already got a red thing on the chart. I probably should have used a different color. I'll make these like blue again. So these are the mark up motions. This motion right here, you might say, though, that this is like downward. This isn't good. But those both are competing. There's no downward one here. That's not true, though. There is. It's just not as, I guess you should say, obvious. I'm not going to be able to make it perfect right this second. But the downward competition, this is what we were talking about when we talked about where those cat ears were intersecting, where we're coming to like a point on this transition. Is like, this is a competition to go down, right? So cat ear, big paw, ear 1, ear 2 come down. Probably going to see like a 50% reduction in that motion. So it should be off this top more than likely. And I don't know exactly where the 50% is, but that doesn't seem way off to me, this 14.5 area, even though it's really low. Well, that's not great, right? But isn't it great? Because if this ends early, it means that you're basically going to get this move from, like, again, 14.5 up to the top. That's a 360% move. It's huge. It's the same as like the move we made here, which did dip below the bottom and then it ripped up to a new high. This would dip below the bottom, rip up to a new high. This is the widening that I both fear and kind of am excited about, because it does mean that there's some pretty huge moves that are potential here as a behavior pattern goes. I could then look at this and suggest that this is the same, I guess you could say this is like a same or similar reality, right, to what we see on a macro scale. This is where things might break apart for some people, and they're like, I don't really understand this part. This is dependent entirely on like trend, and these actually look like they're parallel. They probably are. 41.5, yeah, probably. I just made it a little bit wide. They're pretty close. So that motion right there does not mean that you're ever going to come hit that low again. That's not what I'm suggesting. But what I would suggest to you is that this motion upward, and let's just focus on the upward right now. This one, I can't really change the color of it. I wish I could make it different so you know that that's like hitting that support, moving over. These are just layers. This is more of like Fibonacci fan type stuff, where you're hitting resistances and then backing up. But this concept here, even though this goes really low, think about it again. If this is wave 1 here in the small scale, this is wave 2 on the big scale, where is wave 3 on the next scale up? So yeah, like initially this looks kind of bad because you're getting a series of bumps that are increasing, which means, yeah, you're dropping. The volatility is increasing. You're getting this kind of widening out. But it ends up being quite bullish. As long as this is a pretty strong build out locally, we can then apply it to the big picture. I think it's legitimate. I think it's a legitimate S-curve. And I do think this is it. Well, yeah, but you already did this a long time ago, Booksy. And so far, we haven't seen the results of it yet. No, we haven't. And you also said it was like going to be really short. Yeah, I did. I think that when you look at this as a middle, it redefines it. And that hadn't happened yet. So this is quite far off. And again, as a middle, you'd probably suspect that, and I don't even know where to do it. I'd have to go back and look at this from probably be way up here. Could be at 24. It's sort of just like, I guess what I'm trying to say, it depends on where you pick it, because I've got two different middles here technically, because one is like lower than the other. So I'm not sure. It's in this vicinity though. somewhere up here. Like, that's not going to change no matter how much I change it. It's somewhere up here. I'd have to, again, go back and see if I'm doing it the same way. Because, like, technically, you see this middle cuts through this downward motion. There might be an argument to be made, because it's cutting through it again here, that it's not actually this bottom. It may be, and I'm not sure yet, it may be this one. Since this is where it actually picked up again on the trend, and the rest of it, I don't want to say it's superfluous, but because that would make sense of the dip below and then the dip below and the reaction. You see that? And then that's the reason why maybe each one of these is like slightly different. So yeah, they're all parallel, but really this one started here. Does that make sense? And this guy may be the more realistic one for like the higher portion. So I'm not sure yet. That's a little bit tricky. Maybe all three are going to be used somehow. We just can't see it yet. Hard to say. Yeah, I don't know. That's a tough one. Maybe all three are used somehow. And this is some kind of a Fibonacci reduction. Down, down, down. Maybe even a smaller one right here somewhere. But I would suggest that on the big picture, this is still very relevant. I don't care, again, if other people don't like this. This is not Wyckoff. I don't really care to explain it beyond just saying it's wave analysis, and that I appreciate the patience with my charts. What this could mean, though, is that, again, I'm using like the wrong dial here, and I just don't know yet. I have to kind of take a look and see. That might be more of an accurate middle if that's the case, right on that push. That's really, 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 really high. So, but it is quite right if that's the case. I'd have to, again, come back and look at it. I don't like the idea of being like hyper biased either towards GME, so I would have to, again, take a look. This is a huge markup, but I made a point about this during the stream. This is actually really close to the snapshot they took, and they said that I was mislabeling stuff. And I was like, that's weird, because this isn't even Wyckoff. Like, why are you talking about that right here? I don't know. I was like, I don't even have any labels on the chart, you know? That is pretty darn close to what you'd expect. Dang, that's really close to the exact same move, isn't it? Well, you must have fudged that. I didn't, though. That's the thing, is like the moves themselves, if it's an S-curve and it's correctly mapped, it should be very similar. But the challenge is, of course, finding like where is the middle. I don't know. And then like how far does it go, you know? Because obviously this doesn't look like it follows it anymore, just way off. Then you're like, that's just way off your rocker, right? It's not even in the right spot. But notice the wave formations here. Like, these are really nice wave formations right there. This is wave analytics. This is nothing else. That right there, the definition of that as a movement, and talking about it as like being defined by a S-curve, a momentum play, is not a specific... It's not really Elliott wave. It's not really anything other than just saying like it's weird Booksy stuff, but it's also maybe sine wave. And I think there's people that have done that. That motion, this motion right here, this area right here, all the same in terms of like directional movement. They're just defining like, basically we could try it like a macro, huge potential S-curve. We're defining those resistances and stuff as we come down. Probably keeps going, but you'd have to go to a place of, yeah, it's right there. I'd still have to figure out where exactly the middle is, but that's pretty dang good. So maybe the middle got shifted down, and I'm being like super bullish by thinking these parallels represent like the middle. Maybe that's this shift that's occurring right here. It's possible that the reason this is like kind of pushing and pushing and pushing is because we're really defining where the actual middle is. So it is possible that this might actually be the middle too, like the real middle. It's also possible the low here is the real middle. I don't really want to get too deep into that. But what that would mean is that even though this is a really steep S-curve, what it could mean is that this is actually the bottom that leads to this as a top, which is, I know it sounds a little bit confusing, but it's like you've shifted the line down. So it's like you're changing the angle of the S-curve. So this is designed to get to here, not to the tippy top. I like that motion there, of course, because that's really clean. But I wouldn't be surprised if this was the real target, which makes a little more sense anyways, right there, on a like a more traditional S-curve. So when we draw it out, it's going to end up looking more like that as the wave cross kind of hits the middle around May. Why is that the middle, Booksy? Why is this not the middle? That's a good question. I didn't ask that question, you did. I know, but it is a good question because I just said a minute ago this should be the middle. But the thing is like this is the middle on this cross down, this wave down and up. It's like the middle of the second one. The first middle is actually sooner anyways. It's over here. So I think what we're looking at is a similar phenomenon of like you're getting a series of compressions. It's the same compression that you're experiencing very likely this direction. I need to make this a different color because this is confusing now. You're doing too much, man. All right. That compression right there, I think that's the same motion as this compression right here. Does that make sense? I think that makes sense to me. It may not make sense to you, but it makes sense to me. So like what I think we're seeing is we're seeing a series of, and it probably would actually go back to here. Yeah, this one. So that's the creek jump. That's the creek jump, like right there, since that's where I'm defining it. So these are essentially like compressive motions. And then as it's doing that, they would pair with the bigger motions, like the bigger creek cross, like upward creek cross. So this is like sideways 1, 2, and then break. I think I'm doing that wrong. Up, up. It's got to be here. It must be really low. I think it's this weird thing that goes to like 24. This makes the most sense, actually. I don't know why I didn't think of that, because there's another one here. Sorry. Not to confuse anybody, but there is another one here already. It's right there. There would be like a push up high that goes higher than you think it should, and then it comes down low. That's already happened. So the widening here, I don't know how to define it on an S-curve term. That's tricky, but I think this has already started. Like you're widening out. I wonder. And then it goes up higher than expected. That kind of business right there. That actually makes more sense. So it does. Does it? Yeah. It does, because it does make more sense. Because you would have one more jump. So there might be even like one more here, weirdly enough, off this bottom. Which would explain why it was so darn cautious. I thought it was really odd when it came down that it kind of stopped where it stopped, like almost cautiously at like 21.5. I just find that to be very, very bizarre to me. Because it was extremely like tight. The low was 21.56. Let me make sure I get that right. And I just thought it was odd because it came down to like really wasn't like a good fib level or anything. It goes back to some other stuff, but yeah, I wonder if that's actually the right one. Anyways, so this parallel breaks up here. This one would be, I don't know, somehow it's like really tight, but we can't define it because it's way too small. I'm not going to try to. But I think that makes a lot of sense. So that's the first. So these are action, reaction kind of things. This is the first jump. Of course that makes sense. Now I've got something going here that I can use. What do you mean you can use? Now I've got something I can use. So I didn't think I could do it a minute ago, but now I think I can do it. What changed? Here's what changed. We have actually an example of one already. So I was saying like we don't have an example yet, so we don't know. This is like too fluid, but we actually do have an example. So I apologize. We have a really small micro example. So this is going to get a little messy. So what I'm going to do is, how am I going to do this without completely like jacking up the chart here? I'm going to have to just use my better judgment with motion. So I'm going to do the best I can with this, but I think that's the first creek jump right there. So this is like pushing resist. This is a classic cat ear resistance push. So there's a 1, 2 right there. Push up, and then it reacts and it goes higher. So if this hadn't come higher, I would say it's weak, but it did come higher. So this is like dive right here, and then you see this big push up. That's the first movement. If you want to look at it like musically, it's right there. So here's why this is important, because there's actually interaction here then going forward. Although we don't know how perfect this is going to be, there is interaction going forward with this guy. It definitely uses it. You can see it very visibly on that jump here, that wave cross. This is good. Oh, actually, this is really good. We might be able to figure out, I mean, it's going to be a little ugly at first, but I think we're going to be able to figure it out. What are you going to figure out, Booksy? I think we're going to figure out potentially where it goes to a low. I'm not positive because, again, this is going to be range bound until it isn't. And at this point, I still think just below 20 might end up being where it finds that support, not really, really low, back to like 14.5, like whatever we just said. But this motion right here is already like copied and pasted. That's the crazy thing about this. So then that's the really, really small. I'm going to keep it as 1, 2, 3, 4 objects. I don't know what to call it. We'll just call it like iteration, because I don't want to, again, muddy it up. So if this starts getting muddy, then I apologize. So is the second one on the ear or is it on the top? I think I would just have to use the top. I have to go with my gut on this. So the second one goes to this motion here. And of course it's very similar, which makes sense. It should be a very similar angle. But I think it's higher. That's okay though. That's a bullish sign. The fact that it moved it up and the angle's actually flatter, it means that this pushed higher than this did proportionally. From top to top, top to top, this is a higher push. So this is the second one. Yeah, but where's the creek cross? But that's the thing. It's like we already have it. We already did it. What do you mean we already did it? We did it. Because I can't leave it like that. I have to do one more. Dang it. Because I have to do that upward trend thing. These guys. Hey man, how's it going? Things are about to get a little meaty and a little boring. I think that's why people are dipping out. They don't want to see me chart this for an hour. So I think let's do it like this. Again, I don't want to confuse anyone too much. But if we do it this way, it actually makes more sense. So if you look at this as like, this is where it came above to sell off. Let's make this a different color. Let's just say, I'll use like red or purple or something so you know that's a sell zone. Probably can't see that very well anyways. Then it does make more sense because if you think about that and then you look at the previous one, even though this is really flat, and it is very flat, there's two distinct sell zones. So one is here. You can see right there, it comes into a point here. And then the second is really just like a lower push. It's the M push here and then here. This is a double M shape. So just like there's a double M shape here that's really, really steep. It is very steep. This is also like a double M. And you can see the 1, 2, and then 3, 4 if you really want to look for it. Like this whole motion up, and then 3, 4 is kind of small by comparison. I'm going to bury these I'm going to bury these so I can see the points because I don't like not seeing the bottoms and tops on these wicks. So I'm going to bury them in the chart a little bit. Yeah, so the reaction, I wonder if this is like the same level. It looks like the same level. The reaction is much the same, which is kind of interesting. I think that's pretty fascinating. It's basically the exact same level. So they sort of share the same marker. But then again, this one comes back over that top. So this will be your purple here. So it comes back above, just like this one came back above this top. This comes back above. It hits this higher resistance here, and it does go above even that. Yeah, this is pretty interesting. Something going on outside. Some kind of like work crew just showed up. I really don't want to talk to anyone. I hope they go away. Or just do their job and leave me alone. I don't want to talk. I don't know, man. People always show up and they're like, hey, you gotta do this. It's like, dude, if I wasn't here, could you survive? Because I'm working from home, but that doesn't mean I want to be bothered. I don't know what's going on out there. Yeah, so we basically have like a similar setup. I think probably it's this one right there. So this is like pushing, yep. And then it jumps over the creek right here. I mean, and you can argue whatever you want to argue about this, but there's certainly like a pattern behavior of like creek resistance and pushes. I'm going to mark that off like to right where that... Jeez Louise, just a minute. You're okay, kitties, relax. Oh, that's crazy. Well, I guess that's a good thing, but we're not expecting that. I'm repaving that drive. Well, I'm trapped. It just dumped like a truckload of rock on our driveway. It's free. We have this long drive that goes beside our property. It's technically the neighbors. Well, no, the neighbors use it as their driveway, but it's actually like a road technically. So the city has the responsibility to repave it. But it's rock. So it's really weird. If you looked at it, you would think it's just a driveway, but it's a city road. It's strange. So they just came and dropped. It was super loud. They dropped like a huge amount of rock. I'm like these old stay-at-home like stepwives or whatever. I don't know. Just busybodies. Got to look out the window. Who's that? Gotta know everybody that comes down the street. It's funny, dude. All right, so this motion here, I'm not going to say they're like 100% the same, but they're pretty darn close. So I actually think this is the motion. I got it a little wrong the first time. So I think this is probably the cat ear right here, the initial setup for it anyways, right there. And that makes sense because this stays elevated in the middle. I don't really ever looked at it like this because I didn't really see it as that. I just looked at it as a compression, but I think this is right. And they stay elevated in the middle, and then they try to push low, and that's where the jump is. So it's a similar motion as this. So yeah, this is correct. So see how it comes back up, but then it doesn't go as high as this. And again, that's like really close to the same angle. So we might even want to just suggest that it's the same thing. But for now, we'll just leave it like that. So there's a push. I don't know. We can go on and on. But I was really trying to define these iterations better, not get stuck in the weeds here. All right, so what am I doing then? I'm getting stuck in the weeds a bit. I really just want to see this. I don't want to see anything else. Oh, jeez. Felt like my bones just came out of my neck. Excuse me for sneezing. Came out of nowhere. All right, so then this is just a repetition. So let's focus on the repetition here. That's the S-curve up. So that's probably and it is the creek jumps. It's more obviously like where it should be. I think we have a pretty well-defined action in that motion and that motion. I wonder if those are like parallel setups. You're allergic to rocks. Maybe it is. Maybe the dust somehow is already getting into my house. It changed my air filters. Came out of nowhere. Yeah, okay. So I could see that. So let's just look at it that way for now. This is going to be easier, I think. Why is that? That's not the right tool. Yeah, I do wonder. They kind of look like parallel to me. So I might just use a parallel. 67.59. I understand that the motions themselves, like top to bottom, are not parallel, but 0.59. You really get, if you see something like that, it sort of feels like they're parallel. I always kind of err on the side of they're probably just parallel because most of the time, if there's a buy up that's consistently the same, it's because the strength is being. If they're pretty consistently the same, then I think the strength is kind of the same. It's the same buyers, 67.59. If the only time I pay attention if they're really dramatically different, if one of them is accelerating or decelerating, then it could be a sign of weakness or strength. But this, see how it looks like the same as this push? I feel like it's the same thing. So, you know, I didn't want to do that, but it may even be, I hate to say it, I don't want to go this far on it, but it does kind of look like this might even be the same. God, I can't get that angle the same. I'll just leave it like that. It doesn't matter. This might even be a smaller iteration still. But the thing is that this one doesn't come above. It's the same angle, but this one doesn't come above that top. Like, it doesn't make a higher high. So I don't think there's a change yet. So I don't believe that that's actually like another version of it. If it is, it hasn't changed character, and I don't really care to include it. But this widening would be very telling. So we should probably consider it. All right, so this one backs up. It pushes up higher above after it jumps the creek, and then it basically defines a new creek in doing so. So the M cross that happens here, it does push up, make a higher high, and then drives back down. So then the question is, Man, this is kind of hard. This is difficult. I'm sorry about your ears. Why is it difficult, Booksy? I thought you just had a grasp on it a minute ago. Well, I do and I don't. I had a grasp on it based on the way I was doing it, which were these S-curves. And then I somehow lost it when I tried to get to the small one. For a lot of reasons. Like, I know that's right. That is the one. But yeah, I think it means that you kind of have to use this. I don't know how you could get away with it. Because you'd have to create one more. And I don't know where else to put it. Because this is the only one that's there. It looks really wrong at first because... It looks really wrong at first because you're like, well, this goes way low. But yeah, but then again, so did this. It just depends on how you define it. Because the motion up, you'll see what I mean in a second. The motion up is this S-curve here, but it's not easy to define because of the break low. It goes really low. It looks like it goes too low. So if you're just doing it like gently, you're like, oh, it just goes way beyond the bottom. That's exactly right. It does. But yeah, that's the correct one. Or maybe it's just the same. Flipping iteration stuff. It's really not worth the energy, I guess, to try to get this tiny one to work. But if I got the tiny one to work, my thought is that I think what happens is that you get a I'm gonna focus on the reactions here and not on the buildup just to start, and then we'll get kind of a better picture of it. 68.31. 68.38, close enough. That's this guy there. That's this guy there. Oh, nice. Oh, we should be friends. Yeah, so this really rides the periphery of the S-curve. It rides up the side of it once it goes down, but this is kind of tricky. Yeah, I'm starting to wonder. I wonder if this doesn't actually follow. Ooh, that's interesting. That's really interesting because that actually defines better this motion and this motion, this drop, which is like the 50% on this guy going down. It's right here. It's not actually up there, which I thought it was a little higher. So this is stronger. This is a stronger motion. Oh, that's strange. And look at where the drop is off that. That's crazy. All right. Well, we have to get this right before we can move on. I'm not purposely wasting anyone's time, I promise. Because if we don't get it right before we move on, then it won't work on the next stage. We have to kind of nail it down. I think this is actually correct then. The second hit here is the jump over. And that makes more sense anyways, because when this guy came over the creek, the behavior wasn't to hold it right away. If you go backwards and you look at this, it actually looks like it dips through and then crosses over. So this motion here is the same behavior-wise as this motion here. They're basically a double bottom, but they lead you to a jump over the creek. That's important to note. So then we have a way of defining this as a momentum. So where's the next one? I don't know about the smallest guy. I've been trying to tell you, like, I think it's there, but I can't really define it just yet. I know that this is important. It's going to have to be used because we have to understand what happens now dependent on that top. So now we only have two markers that we can use. One is here and one is here. So which one is it? Big move, consolidation. Dang. I wish I could tell you. I'm not sure. So for iteration A, I'm going to include all of this stuff. Nope. For iteration B, I wonder if I didn't do that right. I know there's a creek jump there, but now I'm looking at this thinking like, well, this one, when it came above that creek, it hops over, punches the ticket high, and then comes low. This one doesn't do that. But I think that's because this is exit. So the difference is that we start exiting here. This is like the middle, around February 25th. So everything after this is like expansion. This doesn't count as the same parts. So really, there's a sort of a part one, part two, part one, part two, part one, part two kind of deal going on. So what we're going to try to do is define part one and part two, and then we're going to have to maybe solidify it into something that makes sense here. This is going to be very difficult to nail down. My guess is that I'm going to end up with two different answers, which isn't going to be fun, but all right. So somewhere over here, you're going to have another part. I'm going to make it pretty big. I don't know how big it's going to be, but I'm going to do like this for now. Shouldn't it just be like a huge widening? I mean, it may be that simple. Like it may be as simple as like just draw this top to this top. Like that's where it's going to go next. It could very well be that simple. But honestly, I'm a little bit more interested in what happens on the bottom. So when this came down and it hit a low, this is where things, again, get kind of confusing because this motion right here is the first jump up. This is the second jump up, which means there should have been a little iteration of it here as well. And then we already know this. This is already answered. We don't need to answer this question. We know that it came below that floor. So whatever happened in this previous time, this ends up being kind of your dip level, which would suggest that it's highly probable. And that is the 2076 level. how low does it actually get? 2079, 2171. It looks like 2078 is the low. So it seems very likely that it dips below 2078. Which means, what does it mean, Booksy? It means this motion right here is this motion here. We don't know how high exactly it goes. So this came back up and retested the middle break. That's actually fairly well triangulated right here. So if you look at that, you can call it an S curve if you want. There's different ways to look at these S curves. This is an S curve, but it's like a momentum move, right? It came up previously when this happened, and it tested that bottom right where that creek jump is made, and then it pushes over. Now I'm going to do something a little odd, which is I'm going to go smaller first, and I'm going to look at what's going on. Fractals are funny. They don't really... Oh, that totally makes sense, though. Because if you use this higher one, it doesn't interact with the same spot right here, clearly. But that's more or less like the actual halfway point. It's a lot closer than the top. So this definition here, across from the middle, these are triangulated across from this bottom. Of course they are, because that is the first jump. It just doesn't make a higher high. So anyways, let's not get too confused. The reason I was saying that is because that may be more accurately what's going on here. Like this created a momentum move up. I don't think that's a 50-50. If you go up to the top, no, never mind. It's pretty darn close. Sorry. I didn't think it was, but it's like right there. It's right on the top. All right, so that is like a double up. This is an ugly S-curve. It's got a really high peak, almost unnecessarily high. Like it didn't need to go that high. It really only needed to go up to like there. Which may be the reason why these are interacting. Like I wouldn't have expected them to interact, but then again, it needed to come above the top. It had to at least get above 29, like 29 here, and it does. So it just had to be a longer stretch. It didn't go low enough, is really what I'm saying. Could have come like a little lower and then come up higher. It would have made more sense. So how are you going to keep track of all this stuff, man? It's like way too complicated. Well, I was trying to do that. Yeah, I don't suppose I really have a good answer for this one. I don't. Here's where things get particularly confusing if you do stuff like this, and why it's almost, again, it becomes a sort of nonsensical thing. Because when I look at this, I'm still treating this as if it's not iterative, meaning that this isn't part of the bigger picture, but it is. So here's what I mean by that. When you look at this, you might see it as like a sequence, like 1, 2, but really 1, 2 is 2. And that's where fractal iterations go off the rails a bit. Like this whole motion right here is the motion of expansion. If I take this same thing and I like make a micro version of it, you'll see that that reflects to some degree like what you experienced here as well. Does that make sense? So the expansion is particularly like volatile, like there's a lot going on there. And it may be again that this had a kind of a false iteration, an attempt during this walk down that just didn't need to be taken from a mathematical standpoint. So then we're right to say that like that is indeed like the expectation, but like every time you add one, it's not like train cars which are bumped up together. It's like you're taking the whole train and just duplicating it but on a bigger picture. So fractal iterations are weird. What we're trying to see if we can identify, so it's like nested inside of it. So in some ways this has already done it. So this is all part of one down here. So in some ways it's already kind of started it and it's already participating is what I'm trying to say in its own action. So it's wrong to say that this is one and this is two. Two includes one. That's where things get kind of crazy. That's what I was trying to say. Like, it's a bizarre concept, but it almost doesn't help to think too hard about it. But it is important to remember that these aren't like confined to singular separate objects. This is starting to make more sense now as a right ear because a right cat ear includes like the whole sequencing. It always does, which is, it's very strange. Like if you took like a macro wave and you put it up against itself, it has like an iterative outbringing on that second ear. It's very odd. Like very, very odd stuff. All right, so we do have, you know, some manner of consistency here. I'm going to leave that as is. So the motion on the whole would suggest that, let's just keep going. Let's not get too heady about it. The motion on the whole would suggest that this break zone, this early break zone, should be coming and backing up to about where that crossed up and over. Not the high cross, which is here. Not this guy. This is a different motion. Not this one. But the one that's like built off the support, which would be this area right there. So it is following suit. They may not go much above. I think we were right. We were saying like 2550 to 2650. I would be surprised if it goes above that, but I think it needs to like push it, just like this pushed it in the past. I'm going to make this a little bit thinner too, these markers, because they're getting in the way already. So iteration A and iteration B, as we're going to call it, share the same thing. So like they're not separate. You can't look at them as separate objects. It doesn't work like that. You'd have to look at them as they're part of the same, or that at least A is part of B. But I think we could say that we could still, just for the sake of clarity, like try to avoid, you know, grouping them together. So that's like A to some degree. And then of course B. And then I think with B, we're going to have to clean this up a bit, as I may have messed up and added too much to it. We really want it to be as simple as we can, and this is not simple. So what happens here is it drives back through, and it does come underneath. That's the crazy thing. It does go above the creek. This is starting to explain a lot to me now. See, it goes above the creek, and it comes right back beneath it. So this does jump up, break out, and then come back below and go lower. This jumped up, broke out, came back below. It just hasn't gone lower. So do we need to have a, that's the question, do we need to have a, I don't know the answer to. I think this line is kind of irrelevant. I think this is like being used as a patsy line. So I'm going to change some things here now. So what I'm going to do, I'm going to remove this one. This is not part of that iteration. It is and it isn't. I don't want to go, again, I don't want to confuse everybody. I'm going to remove this one. This is also not really part of that iteration. And then this guy, because again, we're going to try to group these based on outer motion. And then this guy. This is like a different way of looking at the iterations, so we don't want to confuse ourselves like more than we already will. So yeah, so let's get rid of that. So iteration, and then this one as well. This is something else. We'll put that in 9. So iteration A is this motion. It comes up above the creek and then drives back below because, oh shoot. Yeah, and this is shared. Again, with A and B. I think it is. I get it now. Do you, Booksy? Well, sort of. So there's 2 markers down, and then there's 2 markers down here, but we don't actually have them on the chart just yet. I'll show you where they are in a second. So the first is really the lower S-curve motion. Like it's where ultimately this pumps up, and then it looks like it drops beneath. This is super important because this drops beneath the creek again, and then it recovered and it went higher. That's a big deal. Because like normally, if you saw something like this and it went over the top and then it drops back beneath that creek, you would think that's bearish. It definitely looks like a bearish move. I think it's a bear trap because ultimately, like this is kind of the kicker. This is the one that we really want to focus on right here. That's a big deal move right there. This is the exact same thing we're seeing on iteration B because we came back below. Again, we came back below that marker. So the first iteration, we're right about where it is. It's this guy, but it's this whole thing. So unlike the other one, why is this in B? That should be an A. I'm trying my best to group them correctly. And then this also should be an A, because I don't want to clutter it up. There we go. That's better. Now we're getting it. You guys, I don't know what you're getting, Booksy, but I'm getting a headache. All right. Relax. All right. So like iteration, this is great. I think we're going to get there. I really do. Some of you guys hate this kind of stuff. I don't hate it. I kind of love it. But this right here, this motion, it drives up high, generates a new, just 2 things. It generates a new top. So I want 3 markers on here. So like one is the new top generated, which is the purple. One is the retest on the bottom. This is going to be group B. And then, yeah, and then it comes all the way back in. So it goes back to low, it retests the lows. They just brought it back down, and they actually, we lost it. Like, that's the crazy thing, is it went underneath. It went underneath the bottom. Yeah. So then the next layer up, it's the same thing. So there's a marker here. That's the previous floor. It came down low. It doesn't hit the bottom yet. And this is kind of curious because when this drops in, it does immediately go below the floor, and this one hasn't done that. But what does happen is it works its way back out to the previous top, which is this one. You see that? So it worked its way back up to the orange, and then it comes back down again and tests the floor. So there is a sense in which there's a buy up here off the bottom. There's 2, 1, 2. This has a weakness in it, a little bit of one, and then it does come down all the way again. This has no real weakness in it yet. It's just kind of pumping up. So thus far, it's been pretty strong. And we've been talking about how this may end up going up quite high. That's another whole nother discussion. I think we did that on a different chart. There's a potential for a 26.5 hit even. And I had it marked off. Let's see. I think for Wednesday or something. That was a very different kind of chart. Yeah, this goes up into the 24th, which is Thursday. So it's implied that this is a high move. And it doesn't look like it's going to go down again, though it's not impossible. So this was the S curve. So it looks like the pump would happen potentially into Thursday and or the drop. Now we're about 50, right at the 50% mark here. So it is working. That's a pretty nice trade on the whole. Yeah. All right. So yeah, this move up, let's finish this. I got to stop getting sidetracked. This move down. So there's a potential, though we don't know whether or not it does it yet. We want to see if this is going to change strength. But right now, the potential would be that even if this does go up, and it seems like it needs to, that's the weird part about this. When I go back to iteration A, this does come back up to the second hit and where that jump was. But then it rejects. So it's like the suggestion is that like you could come up anywhere really into this area from like 25.6 to 26.5 because it would be somewhere on the bottom here. And it could be a 50% retracement, but it certainly doesn't have to be. It'd be like a 3.8 retracement or something. So I wonder if there's even like a 3.8 on there already. Yeah, we're at the 236. The 3.8 is right at 26.2. So that looks right. That's the correct number. So then what that does is it's essentially the same exact thing working out here. But what happens after that is you try to drive the price low. But at this point, it doesn't really make a huge difference because if the price comes back down, which it's probably going to do, or at least try to do, it's completely and totally up to itself. Like, I know that I've been talking about repetition, but if this changes right now, it could change a lot in the future. What we do know is that this previously just came down and basically created a double bottom. So right now, that's sort of where you could leave it. You could say, well, I think it comes back to 21.5, and maybe then that's a higher low. That changes the dynamic going forward. It definitely does, because that could mean that from future iterations don't go low. But if it drives below, then it's consistent with what we saw back here, which was a drive below that floor that was originally established. It dipped below it. What we don't know is we don't know scale-wise how to scale this just yet. Frankly, and this is a bit of an obnoxious point that I'm about to make, if the scale on this is quite large, we could be in for an unfortunate time because we don't know for sure that this is even on the first or the second motion. We're kind of guessing that it's on the second motion. It's already kind of approaching one. Backed up, this looks like it's holding right now. That would be like the second motion, 1, 2. So the 2 should be up, and then that would be the end of it. But in reality, it just depends on how you look at it. I don't like the idea of using a bars chart for perfect timing because I don't think that's very reliable. But you could look at it as an iterative motion. Oh, that's pretty neat, actually. That was pretty nice. It's not that bad. This is a bit tight. You can see the early formation. Notice that it's actually getting longer, which is kind of unfortunate. So this first formation is quite short, but then it doesn't really add up. So the second formation is considerably longer here. That goes from like here to here. So the last formation, that's quite a bit of a stretch. That's not good. The last formation, it's kind of inevitable. We don't know the answer, unfortunately. What we would say is that we know where the action would definitely break out, which is over this marker here. So we have a really simple way of buying in. We don't need to know necessarily how long this goes on. I guess my concern is that I don't know. There's a question mark here about timing, that it's really difficult. It looks like it's expanding. Even the bottom to second, the first to second motion even looked like it expanded. So the third motion, unfortunately, the timing is like expansion. It's really hard for me to know. I'd have to do like a ratio and then calculate the change over time in the ratio, which is like an acceleration, right? Or something like that metric. That's kind of a bit, isn't it? It's a bit much. Well, let's just say for simplicity's sake, let's just say that it doesn't have another motion. It just goes up. This is where it happens. It needs to be above here. It makes sense. Again, if you look at the iteration 1, we want this in iteration B. We can derive price targets. So this is the whole point of this. It wasn't to waste a bunch of time being like nerdy or something. It was really to get a sense in which now we have an idea of like what happens after this if it does continue. I'm not a big fan of trend-based fib extensions, but this one did go to the 1618. So that's something. So that's a 1618 extension. Worth noting, slightly higher than the previous top. So this is 1618, slightly over pre-top. So it's worth noting it, and then we'll also look at this as like an S-curve up, because again, it's approximately a 50-50. It's not perfect. So it's approximately a 50% drive over the creek top. That's really significant. Really, you'd say it's 100% plus 100% over previous creek. But I'm going to say 50-50 over creek on an S-curve. So if this is the previous one, oh man, this is where things get kind of dicey. If they weren't already dicey. So the top marker, we're going to recolor this because I need it to be a different color. I'm going to make it green. The top marker has to be thought of a little bit differently than the others. So I'm going to make it green because even though they're repeated, this one's repeated twice. It plays a different role in the second iteration. In the first iteration, it's the top, right? That's defined. In the second iteration, it's actually the bottom. So it has to be the creek that's jumped, right? So like there's a difference. This one's the same way. This is the creek that needs to be jumped down here. So in the very first iteration, which we don't even have on the chart, there's actually an early one. And I guess we could do it, but I would just say that it's not, like, this is a very difficult one because it is not, it doesn't have any change of character. So there is like a tiny iteration here. This would be like, I'm going to call it iter 0 because it's ZERP. Yeah, let's just call it iter ZERP. That's funny. So we'll do that because this one's not defined well, because it doesn't change direction. Like it didn't actually make a higher high, so it doesn't alter the course of events, but it is there. So I think we need to just recognize like that's there, and then it turns into that's the new bottom. This is a little bit redundant because it might be even another one, but I don't want to go there. And then you go into this one, it's the same thing. So now you have, instead of that being the top, so previously I had to jump over that middle. This is the previous green one. That's the 50-50 up. That did work. It's decently effective at the price target. I couldn't tell you if that was the 1618. We haven't checked that yet. Let's take a look. Pretty darn close. The 1618 is basically just back to where it starts. So it goes up to the 1786. That's pretty interesting. So I mean that's something. So when this goes up and jumps the creek, it's very close to the same thing on iter 0. Weirdly enough, when that goes over the top on that creek here, it does do roughly a 50-50, and then it's close. It's more like 1786. So I'm going to put that slightly over the pre-top here. And then on iter A, this one's the same way. It goes slightly over the pre-top here. And then this would be iteration B, which includes A. It's not by itself, but we're just going to look at it this way. So I don't think it needs to go, but just barely over 47. So for all intents and purposes, it's pretty much the same move. It's about a 50-50. Let's see if we're right. So if this dipped below the bottom and came up 50-50 over the top, is it slightly above? It is. So what's the bare minimum? I mean, if we don't know the exact answer, we could find it pretty easily by just going to this top and just saying, let's just say it goes a penny above it. I mean, that's bare minimum. I don't think it's going to do bare minimum. I don't mean bearish. I just mean like that's the minimum. I don't think it's going to do that because the other one didn't do that. But for the sake of argument, we'll look at it that way, because we have to be able to say like that's $48 like on the penny to the penny. So all right, well, that answers that question. So somewhere above 48. Darn it. And then I'm going to just put it to this closing value over here at 49. So it just has to make it above 48. But the other ones weren't exact, right? Well, no, they weren't. But that's important to note. Like, this is just a rough estimation. We're just trying to see, like, again, minimum. So we'll just put it at like 48.10. That's pretty low. And then we'll take it back up. Could this end up making a higher low? Yeah. So this could take off if it does it at this same angle going up into October. Again, just looking at it from an iteration standpoint, not timing. We haven't done that yet. Just positioning. Could this just come down and make a higher low at like 22.40? Yes. And that would be a different setup than obviously like a huge drop. So there's a potential that this doesn't actually go that low. If it goes faster, it could be even higher, because if this goes, let's say it rapidly accelerated to that top, it could go potentially much quicker, like from a higher standpoint. So it could be like here, right, at 23.49, and that would still be a 50-50. Totally works. So this is looking very, very good, like highly probable. And then if it goes below, though that may seem bad, if it went down to like, even like $20, you know, I think you're looking at a bigger extension to the upside. You're looking at like 55 or something instead of just barely over. And I just think that's based, again, on the 50-50 cross. These guys actually went to just about where that was. So this should be purple. So this is a pretty good, I mean, I'm not toot my own horn. I'm just saying, like, this is a pretty decent estimation. I think it'll be about right. And then we can look at the 1618 and the 1786 as well. So from bottom, so whoo, look at that. So like it's so clean. That's so clean. So if this goes to 1970, that'd be fun. It's a little low here. I don't know about that, but it does hit the 1786. So like 1970 is a pretty decent number. That's right where it has to be. Like if you think about it this way, if it were minimum, let's say it had to at least, and I'm kind of estimating, I'm not really clicking on these bottoms, But let's say, again, it had to at least get over 48. You could get away with like that if you managed to get a fib extension to the 1618 only. And you'd have to just kind of determine how low it would need to be. What if they're progressing and it's like a 1.5 instead of, because the other one was 1.7. What if this one's like a 1, and then it went 1.6? What if it goes 1.5? Well, what if? I don't know. Or 1.414 or something like that. I don't know. That's a tough question. I'm just trying to see like at minimum. So we know it gets over 48. So let me see. 48 is right at 1993. That's a good year. But what that means is that if it hits 1993 or above, gives 1618 extension to 48. That's good to know. Now, if it goes below that, it doesn't work unless it gets like a 1786. And maybe that's the case, because like we'd have to like just we're taking it for granted. If we think it gets a 1786, what happened to that? Oh, if you think it gets a 1786 instead, which again would be like what happened this first time, maybe that means it goes a little low. A 1786, it looks like I can't quite get it. It has to at least get to 1819. So 1819 for a 1786. We're going to check these levels out and see what else they produce. So that's important. So let's take a look. Let's see where those are. So 1993. It's a very specific number. It is right around where this gap zone is. It looks like there was a support back here on the 28th of August. And there's a gap here. And it looks like maybe close to the support from this earnings back in June. That's close to like a year-over-year kind of date. That's about as far back as I'd probably take it. So 1993, it's close to 20. So you can look at $20 targets from the past. It's pretty close to back here. Let's look at 1819. Let's see what that is. That one feels really likely as well. These are not arbitrary targets. These are support and resistance targets. Well, why not just start with the support and resistance targets? It's more fun this way, because then you realize that you're on the right track. That's really dang close to this buy up right here from May. So we've got pretty dang good numbers from those extensions. Like really good numbers. So both of those can get you to 48. I just don't know the timing of that, but that's a pretty straightforward. That's a pretty straightforward setup. Isn't it? Now you're going to tell me it's like the golden pocket, aren't you? Of course it is. $19.93 is the golden pocket retracement. Now it's already gone from that point in the past. It actually went from the 618 back here in October. So this is nothing new. But again, remember what we're doing here is we're trying to we're using iterations. What we just did, oh man. What we just did won't matter unless it accurately predicts the target that it does hit. But I got to tell you, like what we just did, if it hits above 48, what we just did essentially like gave us the inner workings of behavior in the market, like what's trying to be accomplished from a liquidity standpoint. What's interesting about 1993 and 1819, again, in that they come below this second support, is it is a spring action. He did something from Wyckoff. That bastard. How dare he? No, I genuinely think this is correct. Now, this is a 0.5 also at 25.40. Very interesting, isn't it? So that's, again, that same marker that we were looking at a minute ago. I didn't have this Fibonacci on the screen, just FYI, when we did that. All we were looking at was iterative models, and it told us that this model, this markup meant something to the previous iteration. It was important for where that breakout was going to be across the creek. That's suggesting that we might actually have this in the right spot timing-wise, because this is where the creek breakout happens, like at this 0.5 marker. So if this coincides with the creek break, then we have a really good sense of potential timing here. I mean, it's not rocket science in that regard. We are just kind of estimating that, but look at where it is, and then say like, oh, well, this is where it's going to jump the creek. Look at the manner in which it jumped it last time. There's a big pump, and then it pulls back and checks the creek, and then it widens out. That is definitely the model I would use here. So there'd be like a big pump, probably to fill like a gap or something at 28. We'd go low, but then we'd widen out, and we would check the 0.5. And there's your consolidation right there, just like we had previously. And then you have like a takeoff. And this is where, again, we're kind of running into maybe a bit more of like speculation, because we don't really know exactly how this travels, through the ringer here. But suffice to say, it comes back and checks near that top again, which would be, again, maybe coming back down to this drop ledge around 30.11. That seems very reasonable to me, that would be sort of a middle zone. And then you basically just jump the creek, but it doesn't do it immediately. Like this one actually consolidated as if it were, and it what probably was to some degree, an SOS, until it finally gets above the creek. This is a 382 area as well. And then it gives you the final leg up in this extension. This is looking more like October on this chart because I have it not leaving right away. But it does mean that there'd be a bullish run from August through mid-October. And it doesn't mean it goes super, super high. It just means it would go above that previous top in a 50-50 type pattern. We don't know, because we don't know what we don't know. We don't know if it hits either of these low targets. I think what we would probably want to do is, if there's clarity, I suppose, like let's say it hits 1993, then I think 53.66 is likely, which is probably like a previous top over here. So what I'm gonna do is like pair them. I'm not gonna say that it's definitely the case because I don't know for sure. But what we'll do is we'll estimate. We'll do it an approximate, and we'll say that this is the approximate target. So we'll say like 53.60 would be the approximate target, because that would be the extension, and at least the extension. You'd go like a range. It would be 48. This is a big range, but it'd be 48 to 53. Still a $5 range. It's not that big. That would be where I would put it. And then if it goes to, since we're using the fib and the other, if it goes to 1819, this is kind of genius actually on their part, because that 1750 seems really likely, and we were measuring really low. We went down to like 14. But now I'm like, oh, well, they could pretty easily dupe everybody. This goes 58.31. So by having a change of character here. So instead of doing a more macro spring type option, you just stay with a higher low. And it is dropping beneath the range down there. So I think using spring is an appropriate term. It's a liquidity check. Now I'm having to like cover my bases, I guess, every single time I mention it. Silly. No, you don't have to do that, Booksy. That's reactive. You should just live your life according to whatever. I will. I won't do it forever, but just today. I'm going to suggest that that's, again, 48 to, I already forgot the number, maybe 58.31. So it's a bigger range. There's a higher potential hit if it goes higher up. So we don't know yet that that's exactly where everything happens. I gotta say, like proportionally, we're doing it right. Because if you look at the previous top and like where it broke out right there, that's definitely like the same exact setup. We're doing this proportionally correct. Like this is exactly mathematically proportional. But that's kind of where you run into problems because it's like, how do you know it's going to be exactly proportional? Well, I don't. I don't know that it's going to be exactly proportional, but that is exactly proportional. So maybe it will be. I don't know. Oh my goodness, Booksy, look. Well, yeah, we're just doing math. It's not, this ain't rocket science. That's what they always say. It ain't rocket science, man. We're just doing math. Yeah, we are. And we're doing it right. And we know we're doing it right because we're getting the right numbers. We're definitely in the right ballpark for these extensions. None of this means it has to happen, but it's certainly helpful. So then the top here is 53.60. You might want to just type that in. It's going to take too long. I'm going to mark off all three of these. So this is pretty cool because we're seeing now that there's a trend as well that cuts through this. And at least for now, it looks like it might follow suit. Like it might hit that same trend. I'm very curious now about this as an extension. And then 58.31. Foxo. I'll look at Foxo. 58.31. Don't worry about it. I already ate earlier. Ooh, and that one right there going into what looks like November 1st. That also intersects that trend pretty neatly. I can't be certain about any of these numbers, so don't go crazy on me. The sooner this happens, the more likely it is, I suppose, like if it hits an earlier bottom, I suppose the more likely it is to kind of reach that target instead. But that would require that it makes a pretty significant drop, like ASAP. Like it'd have to go up and then drop down by the end of like the week to get there. So it'd be very, very fast. So these are kind of phantom targets right now. They're like aiming that direction, but it's not, there's no way to, I can't, like it has to hit the low first. I guess what I'm trying to say. I'll just put it that way. Like it has to hit the low first. You can't be sure about timing until it hits that low. And then it's a little more, I think, objective. You could make an argument for it anyways. Patterns, again, don't mean that it has to go. But that's a pretty cool motion. And so really, this is like the next iteration up. I don't know why I put that in that group. Sorry. I'm getting a little lost in the weeds again. This will be the next one. Well, we figured it out. Did we? What did we actually figure out, Booksy? We figured out a lot of stuff, man. Don't sell yourself short. I think we figured out a lot of stuff because the rest of this, while it may seem again a little bit out there, I think it looks pretty darn neat. Like it's tidy. I really do. So this to me is very, very neat. I wonder if it makes a lower low. I really do. I'm curious. I don't think it needs to. I have this weird feeling like it's not going to do it. And it may end up in this pocket a little early. So what we have is we have a series of timelines here. We have from September 2nd, and then these are the markers up above. And then these are the markers down below. Ooh, don't want to mess with that. I should lock those since they're in the right spot. I need to lock them. Lock them in. Since these are in the right spot, we actually have a pretty decent chance of estimating timing. We know that direction-wise, this is the same. What are you, like 12? Voice just cracked. This is the same direction as the momentum from the previous ones. Doesn't, again, mean it has to be hit, but if it does, then this is the motion. And then what we want to do is we want to take all this stuff, since this is like the future, this is the future iteration. We don't want to, what we'll call it is iter C, and then I'm going to mark off that it's the future, ITERC, because what we're doing is predictive now. It's no longer just descriptive, it's prescriptive. We're describing what happened in the past, but now we have to look at it and say, well, this is technically descriptive because we don't know for a fact this is going to, or prescriptive. We don't know for a fact this is going to happen, but it seems to be the goal. So what's wrong with this picture, you might ask? Well, the one thing that's kind of off is that this only is using this high. And I know I did that, and you guys are probably thinking to yourself, well, yeah, I get why you did that because of this marker here, but why not use the higher marker instead? Doesn't that make more sense? You caught me, all right? Because iteration B, I'm not positive if you were watching that and you were like, oh, I didn't even notice. You should have noticed, because iteration B is not, it's not clear to me if this is the peak that I should use. I'm using a secondary peak here. I think it's the high. I'm not positive. Not the initial peak. And I'm going to make a judgment call and suggest to you that that's the more conservative approach on this, because, hear me out, because this is like a triple top motion that's like consolidating, right? And I think that we have reason to believe, again, that some of this has to do with like just overall overreaching kind of squeeze momentum. The secondary motion tends to be more controlled, and that was the June 7th one. That top tends to be a lot more controlled. And I think that you have the same thing here. You've got kind of a rapid fire buy-in. You can see that initial motion is super strong, right? Then the rest of this is on weakness. Like the RSI starts coming down over here. I don't have it on the chart, but the RSI started coming down from like this point onward. This is all like weakness, but it is controlled, and they do make a more controlled high. And in this case, it's like a double top. So I'm going to use the second one because I think it's more appropriate. It's the outer one. So we're really using, in this case, we're using like this second top. Now this would beg more questions about further use, but we're not doing another one after this. So it's like, am I doing it wrong? I don't know. Maybe. That doesn't really help you, but what I'm trying to say is that I think from a directional standpoint, either one could be used. So if you were using, and you would have different answers, but they wouldn't be like severely different, okay? So right now I'm using the more conservative one, which is this top. Got it? Now on the next one, if I wanted to do a less conservative top, what we could do is we could use the future. We could even call this future 1. We could do another one with future 2, but what we'd have to do is, and this is probably where the 17 comes in, is if you're getting really excited about it, you're like, well, how do you get now to 17.5? The all-time top here locally for this past, 12 months, If that's used, it's considerably higher, which means that in order to get that fib extension, you'd have to come down lower. It also changes the creek angles quite a bit. So it is a debatable thing. I think if you're just using like peaks and valleys, this probably is appropriate still. So the top here is 54.99, which obviously just sounds like 55. That's not the right one though. Hang on. The top here is, sorry, 64.83. Yeah. I don't know why I said that. I must have been reading a different number. 64.83. This is going to be a bit different. It's the exact same thing we were doing before, but we're just going to do it on a bigger scale. And then we'll use this. Let's just snap it. I don't know why I did that. Probably because I knew that snapping it would be a pain in the butt. This TradingView snapping feature is silly, precise sometimes, and it is not allowing me to snap to that wick. There we go. And that actually already looks like it might be in the right spot. Ooh, that looks pretty clean, doesn't it? How'd you do that, Booksy? I don't know. Just did it. It's done, man. It already jumped the creek. Well, that might be a reason why we came back down. What I'm going to do is kind of, again, defer back to what we saw on iteration B and look at those motions. So we were taking it from that previous top here, and we were pulling it through really like a couple different spots, I guess. So we're looking at the highs. Let's look back at A. That's the 50-50 mark over that top. So we want the 50-50 mark over that top. That is there. So we're missing a line here. We're missing, and it won't be green, but we're missing this one right there. So that might be a different story. I didn't try that one before. That does give you a 50-50, but it's like here instead of over here. So it's like on across the bridge. It's very interesting how that worked, because it still worked. But right there, that's pretty fascinating. So that one's a bit different. That goes here to here. I mean, I kind of like that one too. So these are your downward creeks, if you will, the ones that are jumping above. We've already checked one. So that's the motion across. So then let's take a look. I hate to say it, but that actually already looks kind of right. Oh, maybe what this is, though, is this gives us like the actual bottom. Like if this goes up and it hits whatever we said we thought it was going to hit, like 25.60 or whatever, right? And then it did drop. This may give us a really simple way of understanding why it's going down there. This is really backing up to that as a support, because this has been resistance. This was the last time it was used as a support. The only time it was really used as a support was right there. This is another one. It's the same area. It might explain better what this is about, and then potentially, again, what a low would do. And I don't know exactly how I did it like that, but I did. It's very good, actually. It looks really good. So I like that. Come on. There we go. Well, I think this is like a shakeout. You have earnings on July 31st, so I'm pretty sure, right? That's where it is, so it's probably just earnings. It's not a big deal. Previous two earnings have dropped it, but this one's in a different spot. It's not up in the sky. It's actually low. So So it's like a reversal of the motion. So that does a pretty decent job of maybe explaining that. It may also explain why... I'm sorry, it's September 3rd. That's where it is. I said that wrong. I said July 31st. It's September 3rd. We'll keep that on the chart for now. So that way it doesn't disappear. So these intersect at 2015. I don't know. To me, this looks right. So it may actually be up there by then. I think that's a bit much, but maybe it's in the middle. So if this goes down into like August 1st, it hits a higher low at like 2192 or 2190. Then the next motion up and out, this is why we have to do this kind of future look, maybe in more than one way. This is like another version of iteration B. This is going to be a lower 50-50 though. That goes to 43. That's not nearly high enough. Not nearly high enough. Hey, good morning. What if this is the 17 one? What if it's down in earnings? It's still not high enough. But that a more accurate depiction of that same targeting that we were using before. That's a real long move right there. I can't really say. These don't measure very well. I think we were right to use the previous one. This one's not. This is kind of sloppy. It's not really measuring out the way I would hope. Unless they're just the high is not in mind. But that would be a change because previously it did go over that top. And there's no way to do that here. So this worked really, really well on the first one that we made. It does not work very well on this one. And I don't really know why. I don't have an answer. Yeah, like mathematically, it just doesn't work. This would have to be really high. But there's no reason for that. Like, there's no creek jump over here, you know, unless it came sideways. But that doesn't make any sense. It already hit a low here. This is like already in place. So what if it's like not the same kind of a reaction, Booksy? What if it's just like really high? What else can we do maybe to determine it if it's not fib reaction or 50-50s? Well, we could use S-curves. but it's kind of broken. This feature doesn't, it's not completely wrong. Like, I can see why it makes sense here, especially on that. That looks right. But it doesn't really work with fib extensions anymore or anything like that. So it only really works with the fib extensions on the previous one, which is coming up high here. And then this one doesn't even have like the correct 50-50. There's no way to fudge it. Like, it just doesn't work. It's not possible. Like, this goes to 48.37, which is higher than 48, but it's not the pattern fib extensions just aren't working here. That's all I gotta say. Like, it'd have to be a really high fib extension or something like that. It just doesn't work. Maybe, again, maybe if this just like stayed above 23.93, you could argue like the 786. So if this stayed above here, this is a possibility, I guess. Like, let's say it ran up high and then stayed high. It stayed above 24. Then I think you could suggest that that's actually where the fib extension should take off from. In which case, yeah, that's reasonable, I think. That would be a bit different. So you'd have a build out again into October that could go potentially above the top. So if it stays above 24, you might be able to get to, it works. You might be able to get to, it's certainly not a 50-50 at that point. I guess I would just say that. Like, it doesn't work like as a 50-50. Why not? I don't know. It just doesn't. Well, my intuition about taking the second top was probably right. I don't think that that first top is at play. I just think it's not as good. So there's no 50-50 iteration. It'd be some kind of an acceleration, but it doesn't, yeah, it just doesn't work the same way. So it's a bit weak by comparison. So for whatever reason, this marked up and it broke out above here. And it looks like that would probably be around earnings as the crow flies, so to speak. This is sort of another future which, again, it's over 65 by November 1st. But there's no 50-50 in play. It's kind of like on its own in terms of explaining that. So sorry. I wish that one was a little stronger, but it's just not very strong. And then if we used a spring action, in order for that to get above 64.83, it's got to go really low. And no one's going to like that, but it is what it is. 64. I couldn't even tell you where to begin on this. We could look at earnings as a timing metric, but you couldn't look at the upward motion as a timing metric. The latest that could go up, I guess, is that same angle. We already got that angle on here. If it's the same, it doesn't have to be, but if it were the same, let's say it went above there, this does kind of work. So if it hit, that's the 1450 area. It's not way off. It's just low. It's like 15. So there's a potential, I guess, it's still kind of off to me, but there's a potential, I suppose, that if this hit low around, maybe around 15, this does work, but it's not, again, it's not quite my favorite. There's a lot of strange things going on with this one. And yeah, it's just an oddball. It makes sense because of the ranges that were already established back here. There's that cliff right there at 2972, 2980. I'm going to throw a ballpark guess out and say that this is probably like an alternative path for liquidity's sake. And this goes way low. This goes all the way back to, I mean, that's an extremely different 50-50 spin. So this is like 1450, which is that number that we had made a good case for. So it's there. That was what we were saying early on in the stream, was like, it looks like 1450, which is an odd thing to say because it's still, to me, this is a bit backwards. It's almost like you're saying both of these could go up. Well, no. I mean, the reality is that this one, to me, looks the weakest because I could see this stopping short and just not going up past like 40 and just sort of a distribution. That doesn't make me feel good, right? It's kind of like it's too far too fast kind of. And then I think that this gives you a sense of greater clarity. This is January. So I don't think this one seems way off. This could be like a January move. So this one works if it goes to January, but it doesn't really work very well if it goes here. It'd have to be sort of like a halfway move and then like it craps out and then it basically comes back down and still would have to be a January move. So my guess is that this would be just like a stronger way to do it. So this is like an SOS is what it is, really. At least a sign of strength over the recent tops. So in this case, I think this scenario seems pretty likely. You'd end up more than likely having a nasty retracement here. And then you'd still have to like build out into another move. These, I think, offer a good argument for a January move. If it comes really low by earnings, this gives you a pretty strong chance that you're going to have a January move that goes over the top. This is consistent, but it's, again, not really ideal. So those are dramatically different, obviously, directionally. Does that work with everything else that's in play here? Well, I'll tell you one thing. It doesn't really work with the idea that it just barely dips below. I think that the first method that we did, this future, works with like the low, shallow dip. This doesn't really work with the low, shallow dip. Just doesn't. It also doesn't make perfect sense when it comes to this advancement. One thing I'm curious about, and I would definitely be wondering about this, is if this goes up into earnings, I wonder if this is used as a distributive top instead. And that might be a little confusing, but if this is a shallow middle, then it does make sense that if this comes up as a distributive top, it may push that resistance but like fail. And then you're left sort of holding the bag until it gets to wherever it's going to get to on the bottom. Because, and I know this seems like out of left field because you're like, well, this doesn't even make sense. This isn't an iteration at all. Right. It's not the same as the previous two in that it doesn't just copy and paste. But if you avoid going low here and instead you just build out high, I think that could be a bull trap. So instead of like a temporary upside. So instead of just doing what it needed to do and drop low and get to like a dip, instead if it stays high and hangs out high and pumps up, most of us are going to think that that's really bullish, like a more bullish outcome. But in a lot of ways, that could just turn tail very quickly and become a very bearish outcome, especially if it just kind of barely peaks over this top here. And I wonder if the deception in the market makes it too obvious. It's like too obvious that it would just copy paste. But instead, you can have like a mini bull run going into earnings and then dump it again. And people would be like sitting here going, well, you were wrong, Booksy. It didn't do the same thing. Well, you've just tuned out too quickly, right? That's usually what happens, is that you didn't actually watch the stream. And so you just took whatever you want to take and then left, right? That's usually how it goes. But the idea that this could come down again, it's like, it's dependent on iteration workout. And like, we don't know what we don't know in terms of iteration workout. It's true that this came over the top, but if it avoids going low like it did in the previous time, then it's avoiding that liquidity check. Maybe that's because it's strong and the volume's strong enough to hold it up, in which case this is probable. I think you could see like a longer winded upside. Again, maybe going as far as the top, but in the grand scheme of things, I think it might point to a stronger sense of uncertainty about which direction we want to go. If you want to go up, you're ready. You're right there. Just make the dive, do the liquidity check, and be done. You don't have to come back, at least not for a long time. But if you're not ready to go up yet, you might actually go up first to sell down in order to get low. So if the goal is to bring it all the way back down to like 14.5, and we saw 14.5 earlier for other reasons, and I just find that to be pretty interesting. So I think this is kind of like a mixed bag future, because there's a certain, how should you say, like extension to this. Weirdly enough, I actually don't think this is that inconsistent either with what we were just saying. So like, we were saying that like there was an iteration workout that seemed a little like it was slowing down. And we were like, why is it slowing down? And we didn't know. We don't have an answer yet. We don't know why it was slowing down. It just was. But there was an iteration workout that was kind of slowing down. And it looked like it could extend quite far here. This was significantly slower from here to here. So this one could be just like a really long buy up. I know it's odd, but it does sort of make sense to me as an outworking. It's a little confusing because it looks like it just deviates and goes the wrong way. But I don't know, man. That's exactly what typically happens when it does go down. So weirdly enough, though, when it gets to the bottom, then it's sort of like a shoe-in. It looks exactly the same again. It's like it repeats itself, but now it's like dipping back through. I wonder if there's a reason for that. Like maybe it goes to another... Maybe it's going to like another backup point. That's actually hyper consistent. I'm sorry. Yeah, this is a nasty one because this is not what I would love to have happen, but this is certainly possible. Because notice that they generated a downward trend here. This is probably why this is even showing up in the first place. I mean, look at that. Just after earnings, this is the same kind of like drop ledge, like just some massive dump. And every time they've brought it up to this place, they keep doing offerings. I wonder if this is the same area they've done the offering every time. I think this might be just like an offering version of it. That's probably why it's showing up. Je ne sais quoi. This is probably why this is showing up. Really? Yeah, so if this is iteration 1, and then this is iteration 2, it does make sense. Even though this is a mess, and it doesn't look like it went low already, it looks like it's changing character. There's a model of this that just kind of holds on and goes, you know. I wonder if it does go to like 27 or 26.5, and then it holds 24, and it pumps up into earnings, and we think it's running because of like maybe an AMC drop or whatever happens. I don't know. I wonder if in September, it's kind of backwards. This is like rate cut time. I wonder if there's an offering or something made and you actually lose it. That's the same, guys, that's the exact same spot. Like every time. That's probably why we're seeing it here. I think this is just an optional route. I know it's an ugly one. What's really crazy about it, though, to me, is that that actually gives a really strong piece of evidence that there is going to be another move, but it's not set to happen until January. And there's the March 2026. That's the January, February move. It could go up before then. This one went up before. This went up slightly before. But that's the February move. It is. So that's interesting. So which one is it, man? Got to pick one. Well, I don't know. Do I have to pick one? I think what we're running into now is the same thing that we see on like AMC. There's a sense of certainty about February. There's not a sense of certainty about what's going to come before that. And so there's a sense in which we do not have the right applicable timing. This looks like by February 1st or February 2nd. That falls into line with, and again, we may see like a combination of these things, but that falls into line pretty nicely with yeah, that falls into line really neatly with the expectations that we have with AMC. So this is a spring motion here. And then when it does the spring motion, the rest of it doesn't add up as much. I'll give you that. It doesn't look as strong, but I think this would be like a pretty gnarly spring. Like this would end up going into like a hyperbolic, very quick motion if it goes down, because it would jump this creek and then immediately would come back up to probably all the way up here. So it's going to be a really rapid fire, in my opinion. That's what we'd see like a sideways if we saw any. Like this is where you get like a real rapid fire squeeze motion going into like this January move. So this is an extended move from like October, November into roughly into about it definitely could go a little bit longer, but my thought is that probably where is that at? Hang on a second. Where is that one going? No, just kidding. All right. Probably yeah, this peaks out here. That actually kind of makes sense a little bit. It'd have to be above though if it's going to go all the way up. It's 14.5. Doesn't it have to like peak above? Because then if it stops short, it's like garbage. Yeah. It's pretty different. That's low. That actually just gets barely above the top. So that follows suit as well. What a mess. There is a difference in the two. So I'll just say that. This doesn't mean it has to stop, but it would be a question mark about like what happens. I don't know exactly. So these are strange ones because they go really, really, really low. But they do follow logic. Yeah. So then what are we experiencing now if it drops down? We'd really just be experiencing like a 50% marker and with a UTAD, an upthrust after distribution. You could call it an LSPY if you prefer, because it does come back up to the top, but I think that it's actually fairly straightforward because it's a sine wave down. So if you prefer me to use those language terms, it's like a break upward and over. Yeah, like a downward creek. It's a bit tough to swallow that pill because it's rough. I'll tell you this much, okay? I don't think that this one is as... I know it seems like it's not very bullish, but I actually don't think this is that big of a deal. In the grand scheme of things, like, this actually makes a lot of sense too because of the peak here. What this would represent is something weaker. I think if you saw this happen, what it does is it brings to mind that the series of exits after this would be like a double top motion. I think it does beg the question that you go down again here. Like if it rejects off that top, it does have a question mark there about coming back down to 9 still, like right after. You lose a little bit of that swing momentum, but I do think that makes sense because then you're really talking about an outward expression of this kind of run up right here. So the iteration changes quite dramatically. So instead of it being like a pump that just goes higher, dips, and then goes lower, it's not just that, although it is partially that. It's not just that. It is also like a sideways action of ear and then cat 1, cat 2, like ear 1, ear 2 part right here, where this is actually all the second ear, which we already knew, but it's like what that changes is it makes it so that the next motion, like objectively, it's not even a really big deal, but that next motion would be like this. It's kind of an odd one to draw out. It just changes the iteration is what I'm trying to say. So it generates like a 50% mark and then it heads low off that top. These are downward spirals. Which again, it may seem a bit redundant because you're saying, well, I don't really get why it has to go low at all. And I think a lot of people might look at that and suggest that that's stupid or whatever. But if you recall, like on a big macro time scale, it's very much like a question of where the trend support is. You know, if you were drawing trend support as this, then you don't think this is very likely. But if that is the trend support, imagine for a moment this holds, and it's doing it right now. It's trying to hold it. Imagine that the motion is that we're pumping up, but then we're going to come down, chill out, and then reject. Well, that's a very similar motion to what we see here with this pump up, come down, and then try again. So it changes the iterations ever so slightly, that this is really just an effort to like drive the price back through. So this would be essentially like a weakness on the macro because you'd be looking at it as like, well, it just dropped, right? On the other hand, if you think about it in terms of what I've already showed previously, which I think is, I think is legitimate. This doesn't even like register as a problem. It's really just more about how they're getting from A to B. And the compression that we're seeing across here and then the expansion is really a compression into like a rising trend that doesn't ultimately hold up, you know? And so the rest of this is really just reaction move after reaction move, essentially to recapture that trend. So everything falls into place quite neatly when I put the big picture on, because now it's like, yeah, that makes sense. But it went low. I know, but that's the point. Like the fact that if this drops down, that's exactly what you would expect. So these work out really well, because at this point, we don't know for a fact that this is going to happen, but we definitely could see it as a possibility. And if this drops below the bottom here, that's the buy-in, the dip backwards, and we're basically suggesting that what we're doing is we're going back beneath this reaction, right? It's an auto reaction the opposite direction off the selling climax. We're going back to trade underneath that. That's really all this is about, is like coming back down here to buy up again. But on the big picture, then it creates a really simple explanation / argument for why we're doing the exact same thing here. Well, we didn't come low. No, we didn't come low there either. That's the point. You know, it's like, we don't know what we don't know. Sure, that's an easy thing to say, but it's not that simple at the same time. It's like you're looking at how this didn't come down and reach that bottom thinking that that's a really bullish signal. In reality, we might be loading up short positions to try to get down there because we're really trying to get back here. If the operators want to get back to this initial level right here, because they view it as a substantial level to back test, they want to be sure that we're not going to sell off again, for example. Well, volume says that we bought up off here. We're not going to go back down. Volume also said that we sold off like crazy hard off the top. So you can't make both arguments, right? Like you have to say that, yeah, sure, volume might suggest that we bought in like crazy from 10 up, but it would also then suggest that we sold off like crazy from 60 down to 33, that there's a pretty huge wall there of selling. So the rest of this isn't really that illogical. It's the idea of like creating like a double top moment in order to break back out. Now, what I would say is that in the double top, in the midst of this, it doesn't make like a lower low, but I digress. That is not inconsistent, because in this motion right here, yeah, like this didn't come down in between, but if it does come down right now, then it makes the argument that it comes back down later. It wouldn't even be that bizarre. It'd be pretty normal. You know, like that would be almost expected, and you may not ever get up to 65. You may have a nice pump to like 48, and this is a distributive model of basically the same thing, which is weird. And it seems a little odd because you're probably looking at this like, well, it's still holding up. I know, but that's the kicker here, is that this is actually still the same thing. It just hasn't worked itself out, because this technically hits here. And what we would be saying is if this came down to like 14.5, oh, that's too low. Well, locally, you could say that's some kind of a spring action to go back to the top, perhaps, and sell again, try to break out, try to sell again, whatever you want to do. But on the big picture, it's not even like very controversial, because on the big picture, it's like, well, that didn't even come down and make a new low. That's the same thing we were saying here. Like it jumps the creek. It did come down, but it didn't make a new low, so what's the big deal? Why you're saying that we're still in the midst of this, like the iterations haven't finished? Yeah. Basically, because what this was it was a buy up after the push. It's a long-winded motion. It's complicated, right? It's a long-winded motion, but this goes up and then it comes down really low, and then it comes higher. And we'd be basically saying that this goes up, and then it comes down pretty low here on the big picture, and then it goes higher than that previous top, right? Again, potentially all the way up to 65 or something like that. It totally makes sense to me. It may not make sense to you because you're probably thinking like, well, that just kind of throws out everything we just said about where the iterations are actually at. But that's not the way iterations work. Like, they're progressive in that, again, they include themselves. So for this, if it does this motion to the upside and then drops, I'm looking at it as like if it were to go up here and it didn't go farther and then it came down to start. What I'm looking at is I'm looking at it as not just like A, B, C, D in this order. I'm also looking like big picture, and I'm saying that, well, that does kind of work because in a weird sense, because if you look at where we had it's very bizarre, but if you look at where we, not just between these, but really on this push up and out, you would say that this push up and out by itself, without any of the other information, was just this push up, pullback that broke down, and then a second high. You know, like by itself, that's all you would look at. But then what happens is it comes all the way back down to basically where it broke out from. So if you were just looking at this saying, I think this is too complicated, like you don't need to do this stuff. I know that. I'm not ignorant of that. What I'm saying is that this motion right here by itself could be done already. I think arguably it is done already. I think that's been the breakout motion, and this was the breakout motion. But one could make an argument that it's quite long-winded here, and that you're really in this kind of like middle level, and it's going to do the top. But then your expectation would be that it's going to come all the way back down to where it broke out, just like it did here, right? That's exactly what happened. So it almost like, I know I'm not saying it doesn't matter, but it's almost like this on the big picture, if it does something like this, temporarily hurts, but it still gives you the same overall build out that you would expect even if you did it that way. It just has like an extra like sign of weakness in it, basically, like an extra low, which doesn't do a whole lot for me. I'm just like, well, it's just basically like a marker on the chart. But notice that like this mode right here, the one we were talking about just a minute ago, I said this was like one thing, which is down and up. It's actually not. This is two things. This one doesn't have as much steam, which is interesting. I don't like it as much, this path straight up here. But it serves the exact same purpose that this one would, which is like it's breaking out and then trying to go high. And it doesn't change anything like for the future. It does the exact same. It's it's fascinating to me because it's like on the one hand, we were just looking at it a minute ago. It seemed like it was a no-brainer. Like these were like definitely going to hit these targets around October. This doesn't quite get there, so maybe it's a good bait and switch. But it does eventually get there because it's trying to get up high. And what's interesting, again, is it brings to mind the concepts of wave crosses here, like 1, 2, in a more succinct way. But it also brings to mind this motion where it had this consolidation, right? And then it breaks out in order to go up and do like a quick distribution before a correction. And that on the macro picture totally looks exactly the same as like what we see here on that big push-up. So it's pretty fascinating to me because I don't see it as, it's almost like all paths sort of lead to the same mark, which is still to say, like, I think 2026 is going to be kind of a red year. I would be very surprised if it didn't come back down, at least to try. Now, if this pushes straight up, I do think that based on what we're seeing here, if that's the case, this doesn't actually come beneath the low. This could be very long-winded. That changes the dynamic because I think then you have a chance that this doesn't actually come down through the bottom. It comes to like 10 something. Probably would hit like 1080 or something like that. And then it would be like a series of weird like I don't think it's going to be the same exactly, but it'd be basically like working out like a bigger creek would, weirdly enough. But the expectation at that point is like, yeah, you come up high, but I don't know what happens then. We'd have to like wait and see. I'm not going to go any further than that right now. Anyways, so I find it to be pretty interesting because I do think we have some answers, but I think there's a lot of messy stuff here because the second moves here don't really have to go that high. They kind of avoid it. I do find this 48 area to be particularly of interest on the big picture. It's like the middle. I wonder if we need to go above it in order to like extend. I also think it's pretty interesting that in at least two of these setups, you are pushing to the top, but one of them it's like staying a little bit lower and then it breaks to the top all at once later. The other, it goes up immediately and then back down. And we looked at those two setups. So these are kind of messy. This is like a secondary path anyways. Who knows? I'll have to come back to this because I know it took forever, but I don't think I'm quite done yet. I think I can find a better 2 and 3. I think I can find a better spot for these. But what I was saying is like, it's kind of interesting to look at that here and suggest that, well, short term, if we hit these markers, you get pretty succinct moves that are basically 1-to-1. But notice that in this case, when you look at the big picture macro, when you look at the trends and all that jazz, this little squishy middle, as we might call it, of the, I think it's pretty noteworthy that this squishy middle is sort of the same area that we sold off before here. You can see that walk down. So every target that we're getting here and here, and then looking backwards, it's like, it's pretty much right where the middle is, you know? And then in the other scenario, we're really just saying that like, that it doesn't go that far that fast, which is fascinating to me because I'm like, yeah, that's just the middle pocket. And like that iteration seems pretty probable as well. So I think it's a very fascinating setup in a good way, not in a bad way. Like I don't see this as, I know you guys look at it and you're like, this is just completely backwards from the other one, Booksy. I know, but all that really means to me is that I think that if it goes down first, it's probable that it has a stronger push out. It's GME, so who knows? Long term, this may not be what I think it is, but like, it's GME. Who knows? You know, but what I'd say is that if it goes down and it hits these lows early, I don't think we're going to go down for a little while. I think we're going to end up pretty high. I think we're going to end up in like 50s, 40 to 50 area pretty easily by about October. If we don't go down and we stay above here, I'm going to suspect this a lot stronger. So I'm going to be really careful around $30 and especially going into earnings, listening for dilution and or offering announcements and things like that. I think that's going to be very, very important to note because that does send you into a different scenario very quickly. And it ultimately does adapt to itself. But these are pretty decent liquidity targets. I don't find them to be particularly controversial. I think they're very straightforward. And it also makes sense. Like, why would you go there? Because this is above the middle. Like, you're basically doing a double top test. And I didn't include that, but there's also that downward motion here. So there's like triple, if not more, one, which horizontal, which is the Fibonacci extension / 50/50 here. That one's hit. The rising middle of the macro trend is hit, and then this downward motion is hit. It's a really simple place for rejection, right at like 48. High chance of rejection there. I think if there's no offering, this is probably what we see, but I wonder if they drop it first. And then I think if you have an alternative, if there is an offering, I'm wondering if we just drop it down and then run later and only do a run after the fact. Same problem though, you still have the same setup, but not in a bad way. It's just that you still have the same area, but now it's like further over. So you could be pushing it by February. So what's the bottom line here, Booksy? Well, the higher risk play, the bottom line would be as follows, right? The higher risk play suggests that you hit 48, not necessarily 65 unless you go low. But it is a higher risk because it's shorter term. I think that you have to just kind of take it for what it is. But the higher risk play is that you're basically hitting a pocket around 48 from September to October. Now that's a long period of time. It's like basically the whole month of September and October. It's a long period of time, but it really depends on where the bottom is hit. And I would say that what seems more likely to me anyways, depending on where we are, is that we may very well be up high around 31 in earnings. But if we haven't made a low, I'm going to be more inclined to think it's dumping from there. If we have made a low, I'm going to be more inclined to think it's rising from there. I don't think there's much timing difference then to suggest that this probably doesn't get up there until November. So really, like, the higher risk play is November around the $50 mark. Like, so if you're summarizing it, you would say like November $50 if low is made and continue at earnings at if low is made and then you continue at earnings at like 32. And you have to put that because it's an if-then statement. But I do think that that's likely. And then if it's slower, and we'll do the second one here. This is very different. This looks like a flip-flop. People don't like these kinds of moves, but I think this might be the setup if we run into a it's very low. It's like 14.5 up to 17. But I think 14.50 that area is almost the same, which is really unfortunate because it looks like a 50-50 jump, which makes sense. That's usually the way it is. Right when you get to the place where you want to go, it's like, oh, it's the exact same move up or down. But it is, because that's where the creeks are. And if it floats in the middle, it floats in the middle. You're talking about potentially, and it could be a combination of these. Like, I guess it could hit, technically it could drop down to 18 or whatever after 31. That's the other one, but I don't want to go into that. This is more of like 14.50 up to 17 or up to 18 if no low and distribution at earnings. That's like if they do an offering. So those are pretty straightforward. Now, those are very, very, very different, as you're very aware, I'm sure. And then those are the higher risk plays here because of where this is set up. That's kind of the bracketed play. And then the long-term play is probably the least risky because I think that the long-term play in this case is the January-February play, because the January to February play over here is fairly low risk. Like, if it doesn't hit now, I do think it hits then. And then you've got a decent chance that it's going to end up at one of these two markers come February. So, like, the rest of this, and this is where I think we get into like a bit of this is more of a conversation about personal choices and like what you want to do. These are fairly high risk plays. These zones to me are not that high risk because I don't see it as likely that it avoids going back up in the eventual future. So I think it's of lower risk for sure. Is 48. And I mean, if you caught that 48, if you had this longer out view, if you had 48, then it wouldn't surprise you to go up here. You'd be like, okay, I just get out early with whatever. Or if we go down here, it's like whatever. It's still got time. But 48 to 65, it's a big range. But that's February 2026. Both of those early ones are probably the higher risk swings. And I think you're going to make the more money on them if you get it right, but you're going to lose a lot more if you get it wrong. So just keep in mind, like that's, yeah, I think this is fairly straightforward, actually. To me, it looks like both are by about the end of October. I do think it's heavily dependent on what happens right here. So we'll keep the others in mind, but I do think it's probably going to be this contended area. I'm not going to blame anybody if something bad happens, but like it's probably going to have more to do with if they decide to offer more money. I mean, I'm just being straightforward. Yeah. I wonder how like neatly those are. Yeah, spaced. They look pretty neatly spaced. They do look pretty neatly spaced around. So it's a big reactive move. I think if you wanted to kind of boil it down, you could basically say, like if it drops first, this is likely. If you just really wanted to like kind of boil it down to basics, if it goes up first, this is more likely. And by drop first, I would suggest that it doesn't ever really go that. It may not go that low, but it need to come down into that pocket. And I think if it doesn't go down, but it stays above 24, I think you're at more risk. Just on the whole, I just think you'd be a higher risk. I don't necessarily think it couldn't be a combination. That's silly to say that. That to me looks correct, though. It does. And I'm also willing to bet that this is probably represented in those macro moves that we were looking at before, like one of them being a directional move this way, and then the other being a directional move probably this way. Like, they're not that complex, and that's the middle. That's what we were saying before, is the middle seemed not that, I wouldn't say it was anomalous. That's not really the right word. But it did seem to us that that middle was in this pocket right here. So this is where it started changing. We talked about that not that long ago as we were talking about these iterative motions like up, 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 up right here. 1, 2, 3. So this makes sense. It does. Yeah, it really does. And so you're going back to like a liquid center of sorts to try to figure out which way you want to go. Well, and the good news about this may be that if you're not really sure about what you want to do, this is still a target in both situations. So, I mean, even better yet is I would suggest just kind of looking at this as a triangulation target. And it looks like by October, you could be at $29. That's not a big, huge move, but this is like a lower risk play. You're not worried as much about the volatility of the market in this particular situation. This is probably where a lot of your options are gathered anyways, without even looking at the options chain. More than likely, everything is kind of wrapping around here. Like, these people don't know what to do, so they don't know what's going to happen. So, like, buying at buying it for like $29 for like for early October, first week of October. Pretty safe. You're not going to get a lot from that, but you're pretty likely going to go hit that either way. That's what I'm trying to say. I see you. I know you've been asking. I'm just trying to finish. I'm a weird dog. I'm a dog with a bone, I guess. Like I just got to get there. I just got to get there. So, you know. If I can't get there, I just don't feel good about it. And I know that's obnoxious, but it is what it is. So. This is probably why I don't have like great viewership as well. I'm not very attentive to the chat. I tend to be very boring and bullheaded. In my approach. You know what's weird is that I think that for all the squawking I do about trying to be like the best I can be and do all this stuff, I have a lot of big questions about the future. I've been thinking a lot about that lately. I think a lot about how like I don't know really what I want to do with all this. And every time I get to these little like impasses, I ask the same questions. But I was looking at other people today. I was looking at and it's not about what they offer versus what I offer necessarily, but it was more about like, am I in a position where I'm sort of a redundant figure? Am I offering something that's useful that's not being offered elsewhere? I don't know. I don't know the answer to that question, but I think I think it's a good question to ask. When you read about certain companies that make like a lot of money in just regards to their presence, it's not really about the money. It's more about the fact that they just offer something that's good, that's like attractive, and people want that, whatever they have. And I think that's an interesting question to ask. It's not really about the money. But it's just about are you offering something that's worthwhile? Oh, that's nice. I thought we talked about this before because I remember talking about how it made a higher low and then was pushing up right here. We already talked about this. I think you missed it. So I'll do it again, but we did talk about this because I had predicted that it might pop up here, and that's what the prediction was. That it might pop up here and then drive the price back lower, and that would be a weakness. But it didn't. It drove the price back down and it stayed higher. So that's a strength signal. and then it goes up again, and it did go to both the targets we hit. Now it's like way up here, like super high. Back to $1. Not really sure why it went that far. This is one of those situations where the setup probably made and it does look like it made a support around 69 cents and then pushed all the way back up to the top, where there's some unknowns. One of the variables I'm looking at, just glancing over here, is this guy. And I would never have suggested it just wouldn't do it. So if you were like, hey, why didn't you see that? Well, because this happens all the time, but it doesn't always get hit. These are really great. When you see like a change of direction happen, like a big change of direction, it's always good to look at what was going on right before the direction change, because like these often point towards some inevitable top or bottom. But I don't think in the grand scheme of things I would have predicted that, because this happens all over the place. Like, I mean, Charge Point was a good example of one where it has a lot of that kind of motion, but it just never followed through. And now it's going to face a reverse stock split. I don't know what's going to happen. I've exited a lot of my position. Weirdly, the chart looked kind of bullish before all this crap happened. I was thinking that like it was actually made a higher high here after making a low. So in my brain, I'm like, well, it kind of looks like it's ready to just like find the bottom again and take off. And it might. But a reverse split usually it's usually a sign of weakness or some kind, like people see it as like a market weakness. To me, this looked kind of bullish, and I was like, oh, it's going to just get ready to go. I'm wondering if we see it pump up into the split and then like sell back down and come back down low. And who knows? But like before that was announced, I was like, this looks pretty decent. But what I'm trying to suggest is like every time these guys come down, and I would have just been like, that could happen, and then it could just take off. But every time they come down, you could have marked it off, but it wasn't very consistent. Like this one's pretty consistent. This did point to like a low. You've got these build outs like here. This doesn't ever point to any, like this doesn't point to anything. This kind of did. I mean, if you're being honest, it does look like it went there eventually. But like, how would you have known it was going to get there? I don't know. Wave analytics, just measuring out time here, here, here. Maybe this kind of averaging of time here. It's possible. So I wouldn't, when I look at stuff that I'm not really sure about, like that CMBM we were just talking about, like I try not to do that. Like I'm not going to look at something like this and say it's definitely going to hit that mark. What I will say is that if it makes a cross down after generating like an uptrend, if it makes a cross down and it roughly comes halfway across, there's a chance it rebounds to that. That's pretty normal. But that's 100% just wave analytics. That's just action, reaction, That's all there is to it. I think timing is not the right way to put it because everything's different in the market. But I wouldn't have looked at this and been like, it's definitely going to react back up, because it doesn't every time. It just doesn't. So I think I could have looked at it and been like, well, there's a possibility that from here, this is a middle. We did mark it off correctly. That was just a simple retracement. There is a possibility, it ends up using this. That's what happened, and it's back to the top. It's a triangulation method. It's no different. But I don't know if I would have been that bold as to say, like, that's definitely going to happen. It's going to hit a low right around here and then take back off to the top. It's kind of just a rotational symmetry question, and you can see the rotational symmetry is there to some extent. But I wouldn't normally like look at something like this and be like, oh, it's definitely going to come back up. I think directionally we had a decent idea of prices. I think we had the right ones marked off. They were hit. We just were looking at it thinking it was kind of weak looking and wondering if it, because it made another low after that pump, wondering if it was going to hold up. And it did, just did. It made a higher low. It's like kind of the end of the story in some regards. So, yeah, that was all that was missed. One more. I'm on the 4 hour. I don't see any divergence here. I do like that M-shaped bottom though, but I like the shape of this. This to me usually bodes pretty well. And again, same deal. It's kind of like directionally, I would just look at this and suggest that that does imply a direction. I mean, it was already hit and rejected, but you know, just again from a strength indicator standpoint, I do think that it's a pretty decent directive. This is looks like 34.85 degrees. So let's do negative 34.85 or roughly there. Pretty similar. So you can see that motion down right there. It's a cross up. It might work. But I would also then say that, you know, that's just responsive motion. It's not necessary. And this has another split coming in. So it could keep falling. But I go back to the 13th. That's Friday the 13th. And then I look at where that rejection was, which was right here on July 9th, right there. So that's your trend directive right there. So if this were to react up, big if, but if it were to react to the upside, we might see it approach this marker by that split time, which is coming up. It's possible. It's going to try. I mean, it's a high liquidity zone too, so it just so happens that makes some sense. Around 15 cent. I don't know if something else were to occur there that it would be, whether it be good or bad. Not really sure because it's a split. I don't like predicting those things. That does look like a trend break here. So yeah, it's sort of just like the natural course of action, I suppose. That it would break, it kind of comes up, hits that. I wonder if that top reaches anywhere else. Let's just extend it back. Yeah, that's just trend, basics of trend stuff. It looks like it goes back to this, probably this one. I'm gonna make a guess that we're on the right path, but it looks like there's a decently strong collection of candles along this trend. So that seems about right. So it looks to me like maybe 15 to 16 cents. And then we'll see. I don't like the rest of the chart. But I believe it. I believe that by here it could be up there. It's a 44% move. That's Monday the 28th. I would be very cautious about this one because there's a I don't know. I just would be careful with it because of the split. I wonder if there's evidence that this could come up as high as 16 cents. Yeah, I mean, any number of these could be used, I suppose. I would only use this bottom and this bottom on the left side. But in the middle, it's like, man, who knows? There's a lot of noise in there. Maybe that drop ledge would be best. So I could see it going up as high as yeah, as that top again at like 15 or 16. It's a gamble. It'll go past 25. Well, like I said, we'll see. I don't know what's technically here right now, so like fundamentally, I mean, I don't know what's here, what this is about. I gotta go. Sorry. You waited all day, but this doesn't look bad to me. It's a big move. It's like any penny stock, though. I think you have to. I can see that with the split that happened previously. It did that reaction, almost the same thing. See that? There's a reaction here. It actually was afterwards, and then it pumped up, hit that mark, kind of like what we were expecting, and then drove low and went up again. So I guess well, it's a little different because this was going sideways into it. It's just kind of chopped. That'd be like going here and then dropping, and then basically like breaking out like this way, something like that. Like that's a better way to put it, I guess. So if you're patient with it, it might reward you. And then this went and went even lower. I'm just looking at the past. It looks like it came back down again and then broke out high. And then like sold way back down like that. I guess you could make an argument for like 25 cents. That's the 25-cent mark. Right there. So you could say that. I think it's a weird argument, but I think you could say it. So is this a bad place to buy? This would be like a widening is what it is. And then it would eventually, if that happened, and I'm just looking at what happened last time. There's nothing else to it. It may come down again over time. So it's like a widening. That was what this was. Boom, 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 boom. And then it comes all the way back down until the lows. Let me see if there's any other traction on that move. Hold on. Perhaps that right there. So I'm a little off, but yeah, maybe. I could see that. What else is at like 30 cent? Maybe. Might be that one. It's a bit of a messy trend, but all right. I agree. I think it could hit 30 cent. I don't know what that's going to mean exactly with this split. The numbers are kind of weird. You're right, it's like 2 to 1, but or 1 to 2. It's just kind of strange given where they are. So yeah, maybe by August 12th. I guess I'd have to, I mean, it's not that complicated. I guess you just, but that doesn't make sense. Why would the split be that low? That's weird. I don't know if it hits that either. I'm just looking at the last time it dropped right as it split, so I don't know. This was a 1 to 10. And this is like a 2 to 1. Or 1 to 2. Yeah, it's kind of weird. So I really don't know. I don't know. This is different. It's not the same. I mean, looking at liquidity, it looks different from here, but I don't. I guess we'd have to go back in time and see the chart then. Yeah, now I can't really tell what's going on. This thing's like flipping out. I mean, yes, this is maybe a buy. I'll check it out tomorrow. I'll put it down on my little list. I don't have a pen, so I'm going to use a crayon. It's a benefit of having kids, I guess. So this is a Foxo. Let's see, it's at 10 cent to maybe 29 by August 12th. $0.20 minimum, not $1. Oh, that makes sense. Okay. I was wondering why that's a weird split number. I understand now. Sorry. I'll tell you what. I'll do one more. Would you rather have whatever that is, IXHL or DIFI? You want ADVB. Okay. Neither of them. AMX. Like American Express? Oh. ADVB. Oh, I typed in ADVA. Sorry. Advanced Biomed. Okay. I don't know about this one. Yeah, I don't know. This one's... anytime I look at stuff like this, I'm always a little bit curious. This is interesting because it broke out of its downtrend. And I'm looking backwards at where that drop happened here. I'm looking upside down now. There's two massive liquidity candles. Weirdly, it's like before the move. It's this contesting candle. Right at $2. And then I'm trying to see if there's any kind of signaling for upside here. This would be your maybe October. Maybe October. It's a big maybe because this could just continue indefinitely, but maybe October. I'm not sure, but maybe October. That it really depends on some specific things, but There's a lot of directional input here. I'm seeing it fairly clearly. They're signaling some movement, but it's just I mean, it's kind of just like an exaggerated push. They're all kind of the same, so I think that's about as far as I take that for now. The problem is that we don't have any real signal here that's necessarily going to be better. Trying to determine if there's any divergence, but this is down, 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 up, 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 up. I mean, this looked like a stopping point, but I think that buy-in already happened, so it's like you already got the cross up. So if this makes a higher low and breaks out, it could be very bullish. I think you would just wait for the breakout. And if there's no breakout, then I wouldn't bother. Not yet. Even if there was a breakout, I would still be watching to see if it dropped back down for like a reactive move. You know, this is possible, I guess, but I think if it's weak here, you could just be in for sell-off. Like if this comes pretty low. We'd have to wait and see if there's some kind of a directional movement. If it's a bit stronger, we might see it eventually work its way out. You know? But this has not even really created any real bottom yet. We're just kind of we're just putting lines here. Like we don't see any real breakout. So for now, there's nothing to say. It hasn't broken out. So we don't know. Could make a lower low. So I think if it makes a lower low, right now it's probably weak. It's going to go down again. I think if it makes a higher low as it's trying to, its potential is still there that you have to drive the price up and back down for a spring, which is what you would see. This could be a phase or a auto reaction with a phase B top. I could see that, and then have another top here is fine. It really just depends. I don't know if I'd like to see weakness right now on it as the chart goes. And then this would be like a reaction with a retest. And then it would just go. Might be a good first step for it. Back to $1. It works. Directionally, it makes sense. And then later, depending on how this bottom sets up, this really creates a lot of interest for me, because then I'm like, well, if it's set up pretty good, if it does have a higher low here, and then even if it dipped, I think you could be in a potential up wave. That's pretty strong right there. There's a lot going on. I'm not going to lie. There's a lot going on into like a huge amount of interest going into this $2 mark in October. My bigger concern about it is that that's not an actual reactive target, because I've talked about this before. If that's the drop-in, that is where the drop-in happened. This could just be like, we want to go there, but it may not get there in the short term. So what I mean by that is that these wave pivots can be very misleading. like it's the market wants to go there. It dropped off from this ledge. This would be a logical place to come back. But we have seen times when the stock is just weak that this is like a long-term build out. So that's what I was wondering is like it could end up becoming this like really long, I don't know, like build out that just takes forever. So you got to be mindful of those kinds of things. This may not end up at the top till 2026. This is March, so that's also really similar to what we see in the market on the whole. Like that February, March might be a high period. So it might be a good one to buy and hold till March. I don't think I would expect it to go up necessarily any sooner than that. I think you're asking for a lot there. So yeah, I wouldn't be super shocked if it did run up, but then just sort of stop short of a real push and has kind of a longer winded bottoming action here. I'm just kind of modeling it off itself, like what happened here as a low and then pushing up, coming back down, swinging up again, like it's going to go, and then driving the price down into, you know, like a new bottom, essentially. But that's pretty optimistic. You know, that's obviously looking at this as like upside, long-term upside. This also feels likely. So it looks like there's a decent potential for a high around maybe September. And then I would wonder if we're just kind of chopping noise and down until January. And then I know it's kind of on the nose because it's similar to other things, but it just wouldn't surprise me. This seems about right. If it's going to truly bottom here. Is this like an AI stock or something? If it's artificial intelligence, it could definitely have some momentum on that. And like right now, like I said, I'm not particularly sure, pharma. Yeah, but a lot of them are implementing like AI stuff. I'm not particularly sure about these divergences, but there is a decent catch here. And it's low, so it's not a bad place to like buy in long term. But I think it's a better as a long term play going into March 2026. Yeah. So, yeah, it's basically giving you an opportunity to buy on the bottom. Again, the danger here being that if it does dip low, I think you're at higher risk without going up again. It needs to go back up and check like 78 cents, that area. Maybe around 75. I think you're at a risk of just kind of capitulation here. But I don't know, just to go back and get oversold again. Think of it like a head and shoulder on the RSI. So there's a danger, I suppose, in that. But if it did do that, I might even be more bullish depending on where it landed. So right now it broke the trend. So as long as it builds out, it looks okay. This is a good setup. This has a lot more potential. Because of it's already on a trend break, and now we're just seeing if it's got strength. If it has strength, it's an easy uptrend. It's a reversal, right? But I mean, this is one that you could probably trade it to like $1 by like October. You know, if you hit $1, you might see it sell off anyways. it makes sense that it might do that. All right, I gotta go. Appreciate you guys hanging out today. Hope you have a great afternoon / morning. Long day. No, I gotta go. Sorry. I will. I'll take a look. Yeah. Hope you guys have a good one. Talk to you later.